TheoTrade's 2021's high probability income generator. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. A risk disclosure: we're not financial advisors nor a broker dealer. Our company happens to be based out of Scottsdale, Arizona, but I am broadcasting today live from St. Croix in the U.S. Virgin Islands. I'm sorry, I know that around the United States, around the world right now, is in a polar vortex. Let me just look at my watch here. It's 82 degrees right now. It's definitely beach weather. I'm not trying to torture you. I happen to live in a community where we have recently moved, and looks like this is going to be a little bit more permanently home right now. We've recently moved down to the U.S. Virgin Islands. This is actually a community that's filled with a bunch of traders. In fact, what you guys are seeing in the my office space right now, this actually was the office space of a very large hedge fund manager. They ran about $10 billion of capital out of this particular office, and that was before they actually turned it into a gym. I'm converting it back to an office as we speak. But a little background: not going to torture anybody about the Virgin Islands. It is it's quite nice this time of the year, but talk to me in August or September, the first time we go through a major hurricane. All right, let's get down to business. This is why you're here, okay? So you're going to discover today a little bit about ultimate trades, okay? And why they are so ideal for the current market environment. So you can potentially generate monthly income. And we're going to talk extensively about that, what an ultimate trade happens to be and how to actually generate and potential income on a month-to-month basis. You're going to learn, okay, a trading symbol that professionals use on a daily basis to help create ultimate trades, and what that phrase kind of really means. And we say, like, professional, which is thrown around all the time, but there are indicators, okay, specific symbols that many of us professionals use in this business that kind of seldom, filter down to most of traders in the business. We're going to learn how and where you can find edge as a retail trader. That's actually a huge one. Okay, reap the benefits of high probability trades while learning little known secrets to not taking large losses. So we're going to extensively talk, obviously, about potential income. But on the flip side of that, we're going to talk also extensively about how to mitigate some of the risk. If you guys are unfamiliar with the term, I use this term, mitigate risk, but what we're talking about is hedging. So anytime, especially with the types of positions that we're going to be doing today, we're also going to discuss a little bit about hedging. And again, with hedging, we're not talking about the bushes out in front of your house, people. We're actually talking about risk mitigation tactics. Everybody okay with that? All right. And then, of course, we're going to also talk about which products. When I say product, okay, listen, I don't care what you trade in here. People trade stocks, they trade options, they trade futures contracts, right? What products make the most viable candidates? And when I say, I'm an equal opportunity trader, all right, as long as it's a fair and a very liquid marketplace, trade for the most part any product. But we're also going to talk about what products make the best candidates, okay? And what products are a recipe for disaster. All right, moving along over here. So free auto expected move indicator. One thing I want to let you guys know: throughout the course of today's presentation, I am going to use a particular indicator that we call expected move. And it's actually an auto expected move indicator. The indicator itself is incredibly advanced in terms of what it took to actually compile this particular indicator. It's something I use just incessantly. For any of you that are brand new, who here is brand new, has never tuned into a TheoTrade presentation before? So if you're brand new and never tuned into TheoTrade before, this might be a little bit new to you. However, if you've watched any video that we've ever done, you will see me actually bring up this particular indicator. And again, one of the things that I want to make sure that you guys understand, that we're doing the presentation, okay, during this live trading session, well, because the marketplace is open. And I think it's a far more dynamic way to describe the markets. So here's an indicator that I use constantly, okay? And what this indicator effectively does is it shows week to week ranges in the marketplace, okay? But those ranges are depicted by the options marketplace. So this is an indicator. We are going to give it to you at the end of today's webcast because strong feeling everybody needs to view this type of indicator. So stay with me right until the end of the webcast, and I will provide you a link, okay, to be able to obtain the auto expected move indicator. Again, literally, it's an indicator that's changed the way that we kind of view markets. And we're going to use it a few times throughout the course of today's presentation. If we're going to use it, I just don't want to allude to it and then pull it back and say, you don't get it. So it can be used again. I was bringing this up in a moment. This is the spiders, but you could also use it in something like Tesla. Okay. Kind of shows you right now, Tesla hit the lower edge of the expected move. Again, you'll see me use this throughout the course of today's presentation. All right, moving along over here. A few housekeeping items. Housekeeping, making sure everybody's tuned in. Excellent, excellent. All right, so I'm reading some of the chat room as we are going through here. Okay, little housekeeping item. Listen, this is skill set. I'm going to go at a pretty good clip today. Is that all right with everybody? Okay. As I have said to many of you, by the way, it's nothing like pivot points whatsoever. It's completely unique in that respect. I say I'm going to go to a pretty good clip today. What you guys are going to learn today is a bit of a skill set, okay? And when I say I move at a pretty good clip, if you haven't noticed, I'm a highly caffeinated individual. I might be adding to that right now. Shut the door. Turn off Skype chat, whatever else is distracting you, close up Facebook, phones on silent mode, kick out the kids, definitely kick out the grandkids. The dog can stay, the dog can stay. Listen, you took the time to be here. This is important. Focus on being here. And I tell that to everybody because as I say, we're gonna go through a lot of material right now, a lot of material. And I am very comfortable, by the way, if you guys see me looking around the screens over here. So as I was saying a moment ago, I have 3 different screens that are hooked up to the main computer here. I've also got my my iPad going. So if you see me looking around, I like to read chat while I'm live just to make sure that you guys are on the same page. And again, the questions that I ask here, they're not rhetorical questions. I mean, really, if I ask you guys for a couple stocks later, fire them in, make this interactive. You're here to learn, and that's important to me. So here's a little background on myself. Again, my name is Don Kaufman. I'll start from the beginning. I grew up around traders, and I watched order flow for 15 years. That's kind of what brought me to where I am right now. When I say I watched order flow for 15 years, okay, I literally watched order flow for 15 years, and most people don't even know what order flow is, which I'll describe here momentarily. But as I was saying a moment ago, I grew up around traders. I had family that traded in Chicago, starting all the way back in the 1970s. I had an uncle that started a market making firm in 76. He built the company to over 500 seats on exchanges worldwide. For those of you that are from Chicago, you'll know the firm. It was called O'Connor and Associates. O'Connor eventually sold to the Swiss Bank, which became UBS. The deal was actually done in the early 90s. It was a multi-billion-dollar deal, which was huge in the early 90s. And watching that go on, and everybody's like, oh, that's how he got in the business. I had an uncle that was a trader. No, that enticed me to get into the business. Like, nobody has an uncle that's just handing them money. It definitely enticed me to get involved in the business. And in the late 90s, I started trading in Chicago. So I started trading in Chicago in the late 90s, and they immediately moved me upstairs. I did not really like the trading floor. I mean, the trading floor was like, so Chicago trading floor is like first generation walking upright. If you guys know what I mean, it's pretty like, when I traded in Chicago, it was more of a sport than it was a financial product. They moved me upstairs. They made me a risk manager almost immediately. It was only a few years after I started trading, I got invited into a startup brokerage firm, which at the time I was like, this is crazy. These guys, who are these guys? So I knew a couple of guys from the trading floor that started a brokerage firm. The brokerage firm was called Thinkorswim. And I was lucky number 13 at Thinkorswim. And I built the education division for Thinkorswim. And then I went on to actually run education for TD Ameritrade all the way until 2015. We had about 7 million clients at that point. And this is where I say, well, I got to watch order flow. We built a lot of the education at Thinkorswim and TD Ameritrade based on what we saw in terms of order flow. And that means I had access to everything that you did. People always talk about like, oh, order flow this and order flow that. What it basically means is all the client trades that flow through all of the pipes there for years and years. And TD Ameritrade had the largest client order flow on the street up until the point that I left in 2015. And we studied everything that clientele did. If you ask me, do people make money in a covered call? We could tell you definitively. Iron condors, do they make money? We could tell you. We knew everything about what was going on in the retail mind of traders. And what you're going to learn here, specifically today in Ultimate Trades, literally comes from watching billions in others' mistakes, but much more importantly and appropriately, what works best for retail traders. And that's one thing I always kind of like stress is, who cares if you have a market making background? I always kind of like, downplay that. Doesn't matter. Okay. This business is about what works best for retail. We are now retail. What's retail? Okay, it's all of us. You trade at TD Ameritrade, trade at Tastyworks and E-Trade, even Robinhood. We're all retail traders. And that business is very different than what the professional world does. So the other thing I throw out to you here is, again, my email address is right here. We use a common inbox. So if you ever need to get a hold of me after today, just support@TheoTrade.com. Just put Don in the heading. That email goes directly to me. So I've done a couple of media appearances. I constantly do media appearances. This is on TD Ameritrade TV. This is actually the last time, though, I was in studio. Literally, the last time I was in Chicago was 2019. Pretty much the longest time that I've gone. Right now, it's the longest time I've gone without going to Chicago since I'm born. But yeah, it's been since 2019 since I've been in Chicago. I hear it's lovely this time of year in Chicago. This is actually one of the more memorable CNBC appearances. They pitted me against what? Mr. Wonderful. I was actually the short in Apple at that time. It worked out quite well. All right, let's get into it today. So again, we had to get through, some of the preliminary to get to the meat of this. What are ultimate trades? Okay, what are ultimate trades? Like, what does that mean? First and foremost, the starting place for this, higher volatility. Okay, can everybody agree on one thing? I mean, most people don't agree on anything, but can we all agree on one thing? In the last year in this business, we have seen substantially higher volatility, okay, than in previous years. Can everybody agree on that? All right, just throwing that one out there. So I make that very, very clear to people. So higher volatility has resulted in significantly more options premium, okay, and that makes options prices higher. So I've already said it once. I said options. I said options. Options implied volatility skew is at historically high levels, okay? And the volatility of the volatility, okay, is at record highs. That's actually, by the way, the volatility, for those of you that are complete and total geeks, that's what Ultima means. It's the volatility of the volatility of the volatility. You're like, thank you very much, all right? Let me just show you something for a moment, because this is important. People, they don't look at stuff like this. When I say they don't look at stuff like this, all right, whatever, it's Tesla, yada, yada, yada. Okay, you know what the volatility is right now? Here we go. Okay, this is called VVIX. That's the volatility index. Did you know that the VVIX is trading at 122? But if you never knew what the VVIX is before, well, then it wouldn't make much sense to you. But you look back, historically speaking, okay, look how high that is. When I say look how high it is, again, I'm going to show you exactly where we are. Right now, we're here, okay? Now, this thing has been high over what? Over the last year, since the onset of COVID, but it remains extraordinarily high. That is factor number one in ultimate trades. One of the other key factors in ultimate trades, another one that's constantly missed, is what we term skew. Skew, if I zoom in over here, skew has been incredibly high. Skew, as of last night, and again, skew is not a symbol you can trade, as of last night is 140. That is a ton of skew, people. And again, people are not really familiar with skew. They're not necessarily familiar with what some of these terms come down to. So I talk about skew. It's literally kind of like the tweak, all right, of a distribution curve. You know, people have heard, like, oh, it's skewed. I mean, everything you do in your life, can kind of fit, if you will, under one of these distribution curves. And believe me, this stuff's important, okay? This stuff's really important because you want to know why certain trades work, okay, right now when they didn't necessarily work in the previous couple of years. And it has a lot to do with skew. So like everything you do in your life can kind of fit in here. You know, there's really, really good drivers, which should be up here. And there's really, really bad drivers. But most of us fit into the meat of the curve. The meat of the curve is 68% of the time, right? That's what we call one standard deviation. And then you start to look at skew. And everybody always thinks to themselves, whenever I mention drivers, everybody always thinks to themselves, ugh, everybody's a terrible driver. So if everybody's a terrible driver, then the skew would look like this, right? We're skewed, okay? Because if everybody's a bad driver, we all fit in the meat of the curve, which is towards the bottom of the barrel. Right now, there's a tremendous amount of skew, and you're actually going to see that, all right? So how can we use skew to our advantage? Skew provides edge. It provides edge in the sale of out of the money options. Oh, there's the third time it's come up. Yeah, options. I said the O word. I have said the O word. So many traders are currently buying options. Let me throw this out here as one of our first real questions. How many of you that are tuned in today, seriously, okay? How many of you that are tuned in today have actually traded some options, okay? How many people here have traded some options? Again, they're not rhetorical questions. People are trading them every single day, all right? More specifically, there's a huge amount of now new blood, retail blood that are buying options. And I don't mind saying that. New blood, retail blood. What's retail? It's all of us. E-Trade, again, TD Ameritrade, the Tasty Works. And I was saying that a moment ago because all of this with this new blood, it's actually tweaking the price of option premium to be incredibly beneficial once again to sellers of premium. And this is kind of what I call retail gone wild. When I say retail gone wild, here, I'm cherry picking this, right? I cherry picked this one, but January 27th. On January 27th, check this out. There were 60 million contracts of options traded. You're like, whatever, okay? I don't even know what they mean. 60 million contracts traded. Listen, I've been in this business since 1998, and I've seen some heavy volume. That, okay, earth-shattering volume. It's absolutely staggering volume. Okay, listen, in 2021, our average in 2021 is about 43 million. By the way, last night we did 44 million. If you're curious, last night we did 44 million. Here was a 60 million print. But last year, last year at this point, we were doing 25 million. Okay. So the average size in here, it's almost doubled. I mean, the average size in literally in 1 year has like literally doubled in terms of option contracts traded. And most people don't get this, but it actually changed the skew. It changed what we term the kurtosis, okay? And it actually is providing incredible edge for what we term these Ultima trades. And that's exactly what I am going to bring to your attention here momentarily, right? So we're going to talk a little bit today, and some of you are brand new to this, about learning to sell options. So when people first get involved in this business, when they first get involved in the business, and the very first trades you ever do in options, it's like so alluring. Somebody says, you know, hey, don't go out and buy Microsoft, buy a bunch of call options. You can make a bunch of money that way without having to buy the what? Without having to buy the stock. We're not going to be a buyer of options. We're actually going to be a seller of options. And the seller of options, initially, to many of you, is it's kind of like you know, option sellers, people always hear stuff through what I call kind of the grapevine. You know, there's all these myths about option selling, but many of you have heard through the grapevine that selling options is a way to make money. How many people have actually heard that? All right. And they kind of hear it through the grapevine, but they never really get into it. And again, we're talking about options, and I want everybody to know that's brand new here today. Okay. If you're brand new, you've never traded an options contract before. Okay. That is fine. It is absolutely unequivocally fine. We're going to start with some of the basics. We'll work up from there, but, as I was saying a moment ago, is like options. It used to be like 10, 15 years ago, like saying the word options and people would run. It used to almost be like a dirty word. And I hope you guys realize that, options, and I always say this, they'll be the quickest, the fastest, the safest, the easiest way to get where you want to go in the market, but you have to understand them a little bit. Okay. So if you've heard that selling options is, and a lot of people are chiming in this one. Okay. So selling options is the way to make money, right? Immediately people will bring up problems with margin, which is resolved now. Okay. Because there are different products that you can trade and not have to have a lot of margin. But if you've experimented with selling options, you know full well that there's definitely risk involved. Today's session, what I want to do, and to the best of my ability, just separate the myths from the real risks, fact from fiction. Okay. Let's get into what selling options premium is really about. And then, more importantly and more appropriately, I'm actually going to show you exactly where edge kind of lies in this business. So, all right, listen, don't panic. You can do this. You may know nothing about options. I was saying that. I want to say it again. Okay. You don't have to for today's session. Listen, okay. Selling premium can be done in small accounts, under $5,000, and now retirement accounts. Okay. There are aspects of this business that have changed substantially, literally, like in the last year, that you may or may not be aware of. Okay. So if you're brand new and you've never traded an option before, right? For starters, grasp big, broad strokes of logic, grasp concept. Okay, we're going to talk about probability. We're going to talk about risk. All right, let's jump into it. Good? Everybody good so far? Again, don't lose me. Don't panic on me over here. There's a lot of different facets of selling options premium. So when I start talking about, options premium, and again, this is something that I grew up as a premium seller. I mean, when I say I grew up as a premium seller, I literally grew up around the marketplace. And when I first got involved in it, it's again, second nature to me. So selling premium can be referred to in a number of ways. When people talk about selling options premium, they'll call it selling premium. They'll call it credit spreads. They'll call it a short call. They'll call it put spreads. Okay. There's short call spreads. There's short put spreads. There's short puts. There's short calls. There's delta neutral trading. Delta neutral trading is most often, okay, referred to as delta neutral trading, but usually it's around selling premium. There's selling naked. Anyone else have one? Iron condors, mambo combos, different types of back spreads. All of these, okay, are in fact, okay, selling premium. And I just throw that out there because it's important, because we're going to, again, we're going to go through a little bit about selling premium. So selling premium can also be used to create bullish and or bearish positions, but are generally considered market neutral. What's market neutral? I don't want us to move, and I'm okay with that. All right, moving along, profitability, okay, and probability, or probability and profitability. They go hand in hand. You're trading, okay? In this business, your trading is based on probability. So let's talk a little bit about probability here. You and I, we can go out right now and we can create trades all day long, okay, with a 90% probability of success, but you can still lose money. One of the things that I want to just drive home to you is that probability alone does not make you profitable. Okay. And this is something I'm going to say right now, and I'm going to bring it up again in a few minutes, but all the time, okay, we get emails here at TheoTrade. And again, I stress this because it's important, because somebody's going to send me an email after this and ask the same question. People send me an email and they say, hey, what % of your trades are profitable? And I would just want to start like laughing. Okay. I'm going to tell you right now. Okay. You want me to have 90%, okay, profitable trades? Boom, done. Doesn't make you profitable in the long run. You want your probability to be 90, 95%? Of course, I can do it right now. Don't worry about it. Anybody can figure that out. Okay, that is not going to make you profitable. So I stress this to you that markets are a trade-off. Markets are always a series of trade-offs. Higher probability equals higher risk. Okay, you can be right 90% of the time and you can still lose money. So where could you find edge? I mean, that's what people are here for. Like that's, when we start talking about like finding edge. So good, because now we're going to show you what's going to become very, very important, right? So let's start talking a little bit about discovering probability and premium selling tactics, right? First and foremost, right? I'm just going to throw this out here, and then we're going to go into the live market, okay? We'll go into the live market. Let me first give you a fictitious stock. So anytime I do like an example of a fictitious stock, and I'm actually going to draw this on the screen over here. Here's a fictitious stock, and we're actually going to call this stock stock. Every fictitious stock I call stock. All right, first rule of thumb, I do not own the stock. I do not own the stock. Why not? I don't want to. Why not? I don't have the money to, okay? All I want to think about right now, and let's not worry about risk just yet. Just bear with me for a moment. We're going to go out there and we're going to sell an option, and I'm going to sell it naked. I'm going to sell it naked just to make a point. We want to first learn about probability, okay? And then we'll talk about potential profitability and consistency with that. So we're going to go out and we're going to sell, right? In this case, a 60 call. And the 60 call is going to be trading for, let's put $1. Does that work with everybody? So here, let's bring it down here. We're going to go out, we're going to sell a 60 call, and we're going to collect $1. And when's this call good for? It's good for 1 month of time. So I sell a 60 call. Now, for those of you that are absolutely unequivocally brand new, if you've never traded an option before, you don't even know what an option is. So let's talk a little bit about this 60 call. So what does a 60 call give us the right to do? It gives us the right to buy the stock at 60. Wait a second, you're not buying the call, you're selling the call. So let's first identify what a 60 call is. The stock is currently trading at 50, right? So you have a stock trading at 50 and you're looking at a 60 call. And again, even those of you that are experienced, okay, hang with me here because things are going to turn from what you think is, oh, this is gentle and easy to, holy crap, like I didn't see that before, okay? So hang with me here for a second. Stock's trading at 50, you have a 60 call. I'm going to sell the 60 call, okay? First of all, what's a 60 call? If you buy a 60 call, it gives you the right to buy the stock at 60. Okay, who wants the right to buy the stock at 60? I don't know, maybe you do. Why would you want the right to buy the stock at 60? Well, you might want the right to buy the stock at 60 because you think the stock's going to 70. You think it's going to 80. You think it's going to 500. This thing could be the next Tesla. You never know, okay? But somebody definitely wants the right to buy the stock at 60, okay? In this case, you are going to sell a 60 call. You go, wait a second. So what am I doing then? Okay. Well, then you don't have the right to buy the stock at 60. Okay. You are then obligated to give somebody else your stock. Okay. Which you don't even have. You don't even have any stock. You don't own the stock. You've done nothing with the stock, but you're obligated to give them stock at 60. So let's go through a couple of scenarios here, right? If you sell a 60 call, you can sell a 60 call. You can sell something that you never, ever owned. What do you get for that? Well, you're selling yourself into an obligation. And because you sold yourself into an obligation, see that? You get $1 credit, okay? What can happen to the stock? Stock can stay flat. So if the stock stays flat, what do? You keep your dollar. Yay. If the stock goes down, oh, down. What do? You keep your dollar. Okay, so that sounds pretty good. I'm liking this so far. What if the stock goes up? You're going to freak out. Let's say the stock gets all the way to 55. If it gets to 55, you still keep your dollar. If the stock gets to 60, if it gets to 60, technically nobody wants the right to buy the stock at 60 when the stock is trading at 60. So you still keep your dollar. So when do you start losing money? Anything above the level, okay, of what? 60 plus the dollar you collected. So your break-even point, BEP, is right here at about 61. What do you do after it goes over 61? You're like, you're throwing up in the corner. It's absolutely horrific. Okay, but stop right there for a second. Delete everything off the screen. We go out and we sell, okay, the 60 call. We collect $1. And why we're doing it initially, and again, let's just assume we sold naked. Let's not worry about hedging. Let's not get any of the intermediary in here. Why we're doing it right now is actually multiple fold. But that 60 call collects us $1. What's the probability embedded in this trade? See, what do you think the probability is? Okay, stock. What do you think the probability is in here? All right, sell the 60 call. This could have a probability upwards of 90%. In fact, right now, the probability is even higher, right? And this has a lot to do with you, the retail client. Are we okay so far? It's a little quiet in the chat rooms. It's a little quiet in the chat rooms. All I want to make sure right now is that you guys understand the idea, the ideals of selling a 60 call. Okay. You sell the 60 call and you collect $1. But what happens if we go up to 70, up to 80, up to 90? Well, okay, there is one nice thing about selling a call. And again, in this particular case, we're going to assume we did it and we did it naked. But as you actually sell the call, you have a full, okay, $10+ of movement that is necessary before you start to really feel pain. And there are incredibly easy ways to mitigate. Remember, I talked about this right when we first started, to mitigate or control risk when we start getting up to this $60 area. So what's the probability embedded in here? All right, so what's the probability? I'll call it about 90%. Now, with that, before I go any further, okay, you guys give me a stock. Let's go find a trade. Come on, let's name some stocks and we'll actually go find some trades in those stocks. And when I say let's name some stocks and find some trades, I'm gonna bring up the live market. Okay, so people are bringing up Microsoft, okay, Airbnb, Apple, Netflix. All right, Netflix. Somebody says, I want to do a trade on Netflix. Listen, I'm just going to go right to the 30-day expiration. We're going to have some fun with this. And I'm also going to pull up something called implied volatility. I'll tell you right now, Netflix, yeah, this is a high risk candidate. All right. So remember earlier, I talked about like 90% style trades. Somebody always emails me and they say, how often are you profitable? I don't know. How often do you want to be profitable? Okay. Here, let's go for probability out of the money. All I did, I'm going to close up this left side bar. All I did is switch over here to probability out of the money. By the way, time out. The platform that we are looking at right now. Okay. When I say platform, this platform is known. See if I can actually see the name on it. It's Thinkorswim. So Thinkorswim is where I started my career in the brokerage business. Again, I spent 15 years in the brokerage world. And with Thinkorswim, the founders of Thinkorswim eventually sold it to TD Ameritrade. I worked for TD Ameritrade for about 5 years. My buyout was 5 years, and 5 years and 1 day later, we left and we started TheoTrade. But there's also Tastyworks, and I also use Tastyworks pretty extensively. I'm just showing you a differentiation of several different brokers that I use. But here, okay, one thing I want to enunciate very, very clearly, okay? Anything that I do in terms of trade is live, all right? So these are live accounts. Here happens to be an IRA, for better, for worse, whatever the P&L is today. Listen, the markets aren't even really moving much today. Well, the S&Ps aren't, but this account, all right, is my IRA. This is just a standard, trading account. It's actually portfolio margin, but that one's about, and again, any trade that I fire off live today is not necessarily a recommendation. I trade live throughout the course of each trading session. So in terms of Netflix, okay, Netflix, immediately I say like, hey, well, let's do a trade that has a 90% probability. To find 90% takes about 2 seconds, okay? And I'm serious about that. Look, all I have to do is come over here, probability out of the money. There's probability out of the money. This trade, whatever it is, has a 90% probability. That doesn't necessarily mean, though, that it's going to make money. But I am going to tell you, Netflix, interestingly enough, would actually fit as one of our candidates. It would definitely fit as one of the candidates for an Ultima trade. There's skew in this, okay? Somebody actually came in here and said like, Mo, it's not going to fit. Tilray, not going to fit, okay? Ooh, Goldman Sachs may actually fit, okay? XOP, that actually would fit as well, okay? Tesla, interestingly enough, Tesla will also fit right now, okay? When I say fit, there's a certain model, a certain chunk of criteria that I am specifically looking for in a particular underlying, okay? And that model and that criteria brings me not just to the 90%. Like, listen, anybody can open up a symbol and go, look, I have a 90% chance. Like anybody can do that. That's not going to make you profitable. There is edge, okay, in certain products today. Now, everybody's looking right now. They're like, oh, this is like a $700, $800 stock. Oh, Facebook is this. And all right, listen, you can even go into stuff like the energy sector. XLE. This is a $40 product. $40 product, open it up. This too can fit, fits kind of the mold of some of this stuff. But I want you guys to understand that we can do 90% all day long. And again, I'll reiterate this. We can do 90% all day long. All you have to do is have a probability calculation, which every major brokerage firm now has, right? I helped build this one on Thinkorswim. So do not think that 90% per se makes you money. And it's such an important portion of becoming successful, especially in the options world. Don't ever let anybody tell you that probability alone, okay, has degrees of probability, of profitability, because we have to go deeper than that. We have to get you better than just let's do 90% trades and then what? Pray that they work, because that's not going to work long term. That's not what Ultima is, okay? And we're going to get into a little bit more depth over here. All I wanted to introduce to begin with is higher probability. Again, a monkey can find 90% plus trades. That monkey, though, better be able to hedge. So we're actually going to talk a little bit more about selling options, okay? And in selling options, we're producing what's termed positive time decay, right? When you sell options, every day that passes sees the dwindling, okay? The dwindling down of options premium. So as time passes, the options you sell decay exponentially. So almost everybody has seen this. Now we're going to tear apart your world. This is where I'm saying right now, if you're experienced in this business, listen to me very, very carefully. Experienced, okay? Very experienced, because this is where everybody's going to get something wrong. This is, I just started with the basics, right? Just to show somebody what selling a 60 call is. Now we're going to go into some of the extreme. There's a huge misnomer in this business, huge misnomer, and that's this. When you got into this business, you were actually told options decay like this. And up here, it's worth $3. And then over here, it's worth $2.80. Then over here, it's worth $2. Before you know it, it's worth a dollar. And then you're like, oh, it's totally zero. It's not even worth selling. How many people have ever had that experience when you bought options? You're like, it's worth $3. It's worth $2.80. It's not that bad. It's not that bad. Oh, it's worth $2. It's worth $1. It's worth nothing. Okay. You always hear this, that options decay faster the closer you come to what? Huh? Options decay faster the closer you come to expiration. How many people have heard that before? Okay, anybody? Options decay faster the closer you come to expiration. Absolutely, unequivocally the truth. They do. The only thing that most people don't recognize, especially the ones that teach us, that's ATM, which means at the money, okay? At the money, options decay rapidly the closer they come to expiration. But what people don't tell you is that the risk, okay, risk also increases exponentially the closer you come to expiration. There's another word for risk. For those of you that speak geek, it's called gamma. All you hear about in the marketplace lately, gamma squeeze this and gamma squeeze that. What do you think they're talking about? The gamma risk right now is freaking enormous in this business, okay? So the faster we decay, the more risk there is. The faster we decay, the more risk there is. There has to be a better place to sell options. Now we're going to get serious, okay? We're going to go back to our distribution curve. Discovering probability, okay, and premium selling tactics. So now when I say we're going to get a little bit more serious, okay, now I'm going to go into a product that almost everybody should be familiar with. We're going to go into the spiders. Spiders okay? The spiders okay with everybody? We're going to go into the spiders. I'm going to close up this 30-day option. We don't need an all stinking 30-day option. Let's get crazy. Let's go 93 days out. Let's go 93 days out. All right, and 93 days out, I'm going to cruise all the way out here. I've already got some positions on and out at this level, but it's fine. Okay, let's go all the way out here, 93 days out. And let's look at this this market here. This is an option, and I'm highlighting an option for you right now. The option that I'm highlighting, okay, is the 430 calls. Okay, 430 calls. 430 calls are trading $1.79, $1.83. One of the first things that I want to bring to your attention. I'm going to go out and I'm going to sell a one lot just to make a point. So here's a market of $1.80, $1.83. Don't give them what they're asking ever. I'm going to come in here and work the market $1.82, which means if the market's $1.80, $1.83, if I work at $1.82, they're going to move this market to $1.82. Confirm and sends the trade, move to $1.82. Watch the market. Now we're $1.82. How could I possibly have known that? Because at this point in time, I'm the best offer on the screen. Okay. Again, as a market maker and also having traded in the brokerage side of the business, you have to understand what the rules are. The rules are basically simple. If I am the best bid or the best offer, they have to actually show me as the best bid or best offer. So I'm $1.82 offer. If anybody wants to trade in this marketplace, they have to trade through me first, meaning that my offer is out there, okay, at $1.82. I have to be filled before everybody else, period. There's no if, and, or but about it. Now I'll get queued, okay, with retail traders. But if there's a professional, professionals cannot step in front of me. That's how options work. It's actually one of the greatest advantages in options that so few people know. Now, if I wanted to get filled immediately on this, okay, let's come back over here and show you this. If I wanted to get filled immediately, okay, so we're $1.81, $1.82, just leave it in, I'll fill, okay? I'm not changing my price. I'm not changing my price. So let's look at this trade. I'm trying to sell a 430 call. Why am I trying to sell a 430 call? It's 93 days out. Why would I ever want to be this far out in time? I'm going to tell you exactly why I want to be this far out in time. What am I trying to do when I'm selling options? What am I trying to do when selling options? I'm trying to collect a little bit of decay. I'm trying to collect a little bit of decay. I'm not trying to take extraordinary risk. I don't want to take extraordinary risk. I want to get a good fill. I want to get in. I want to get out. I want to get on with my life. And I do not, again, want to take any extraordinary risk. I want monthly income. And you go, wait a second. Why do you want monthly income? But you're going to have to wait 93 days. Who said anything about 93 days? What are you, crazy? I don't want to wait 93 days. If I wait 93 days, okay, I could be dead in 93 days. I do not want to wait 93 days. What I want to know is this. Close up the option chain. What is a 93-day option worth? Okay. 1 month from now. Whoa, because people look at this initially and they don't understand. Even the most experienced traders in here, they don't get it. 93-day options. What is this thing going to be worth exactly 1 month from now? I have an answer for you, okay? And there's an answer on your screen, and most people don't know this, okay? Let's put all factors being held equal. All factors being held equal. Let's keep the market exactly where it is. The 93-day options, we are selling, okay, the 430 calls. We're going to sell those, and I'm going to sell them for $1.82, right? What are they going to be worth exactly? Okay, well, basically like 30 days from now. They're going to be worth what these April options are worth right now, assuming all other factors held equal. I'm not saying the market's going to go up, market's going to go down. I want to know one thing: how much decay? Because that's what this is about. It's about decay. What are the 430 calls going to be worth? Okay, in 1 month. I don't want to wait. I do not want to wait 93 full days. All I basically want to do is sell something, okay, and then wait 30 days. Let's see what they're trading for. So again, open this up, okay? These little monkeys I'm trying to sell, we're $1.80, $1.82. I'm still the best offer on there. I haven't filled yet. I don't need to worry about getting filled. It'll come to me. So I'm trying to fill these for $1.82. What are they going to be worth exactly 1 month from now? Let's go look at the 430s. 430, 430, 430. He looks for the 430s. He finds the 430s. Guess what he finds? They're trading for basically 50 cents. Okay, think about this. I can sell something right now for $1.82. What? Just a couple days later, like from 93 days down to 58 days, it's 30 some odd days later, I can buy it back. Let's say commissions and everything, I can actually buy it back for about 50 cents. That's including commissions and everything. Is that a fairly good return? Okay. By the way, the cool thing is I'm not taking a huge amount of what's termed gamma risk. Okay. People want to know what's changed in the marketplace. That's changed huge. This is what Ultima Trades is about. Okay. People don't recognize that time frame has shifted dramatically, that retail clients have actually changed the nature of the beast. They've changed options and changed them substantially. Okay. And most of you don't have an understanding of what has actually changed. As I said, it's skew, it's kurtosis, it's Ultima. Okay. It's the volatility that's actually shifted in here. And it's allowing us to go out there. Look, you can see my positions are on here. I got positions scattered. People, I got positions scattered 93 days out, 50 days out, 42 days out. Check this out. If I go to the IWM, here's the Russell. I'm scattered in the Russell as well. 93 days out, 58 days out. Look, I can even go as much as 121 days out. Okay, why not? There is incredibly low amounts of risk of doing this. Everybody's asking the right questions already. They're already coming in here and they go, you're trading a naked call. Okay, you're doing it naked. I don't have the money. Absolutely do. Why don't you have the capital to do this? Okay, you can do this now with $2,000 in your account. You don't even have to have $5,000 in your account. You have to understand the products. Now, if you want to hedge, you can hedge. If you want to turn this into a spread, you can turn it into a spread, but you don't have to anymore. Okay, they've changed the nature of the business, and they've changed the nature of the business substantially. So when I come in here and I talk about, premium selling tactics, we're going to go out. Okay, it filled. So as I said, we will fill. Just give it time. Come back over to the spiders, okay, and see our fill. Okay, it's a miracle. Look, we're filled. All right, market shifted a little bit, but we're filled. There's a little bit of, just a little bit of a rally. The S&P's rallied by a full point, and we are filled on that one. Let's look at our overall positions in the day. Aggregate everything. Okay, we're still good to go. Good to go. All right. One of the things that you have to understand in this business is, again, those that are experienced are asking all the right questions. What we're going to look at in doing in this marketplace is we can sell, okay, far out of the money options with quite a bit of time. For instance, here's a $100 product. I might be able to sell something like the 120 calls. And again, here I'm alluding to calls. We could also look at puts, and we will momentarily. But what I want you to understand over here, I'm going to go as far, okay, as 3 months out on time. 3 months out on time. And then I'm going to turn around, okay, and mitigate the exposure. When you look at this and you think about all the risk in there, okay, that's something, ease up. You're not going to have to worry, okay, nearly as much about, number one, risk, and nearly as much about, of course, margin. This business, as I've said time and again, it has changed, and it has changed for the better. So why sell options so far out in time? Again, I want to bring this up and detail it again, okay? So you may have noticed that in my example, I sold options a few months out in duration. Typically traders, when they learn about options, they sell shorter dated options, okay? That's, again, it's why you're actually tuning into this webcast. And immediately people are saying, why not go further out in time? It's going to be a sweet spot in here, okay? And you're tuning into this webcast, right, for specifics, for criteria. That's what we do here at TheoTrade. I mean, that's what, enables us to go out and to trade effectively in both time frame and to mitigate risk. When I say criteria, it's specifics, it's recipe, it's detail. When I say detail, what option do you sell? How far out in time do you go? I mean, specifically, what kind of volatility should we have? That's what criteria kind of breaks down to. But when you sell options that far out in time, okay, again, there is literally a sweet spot onto which we don't want to take extraordinary risk in doing this. And it's a critical aspect of this, all right? Now, for those of you, again, that have some experience in here, now we're going to have some fun. 90% probability. So let's bring to light all of our greatest fears, okay? How many people here, again, how many people here that are joining us today live? And there's a lot of people joining us live, but how many people have, in fact, okay, gone out and sold option premium at some point? Okay, how many people have actually sold option premium at some point in time? Okay, because now I'm going to tell you the livelihood of an option premium seller. So what I just showed you a moment ago, I'll even back up for a second and detail this. But I showed you a moment ago, it sounds easy enough. Like you go out, you sell some out of the money stuff. I mean, here in the example I just gave you, I like to do a little bit more like live examples. Go back over to the spiders for a second. Okay. And when I bring up the spiders, and again, I just sold an option here and it's a call, whatever. Okay. Didn't make a difference. I go out and sell this option. I sell it for like $1.82, $1.85. Okay. Time out. So you sell something for $1.82. And then 30 days later, you're capable of buying it back for say 50 cents. You're capable of making 50, 60, 70% in a period of like 35 days. But again, you're not driving that option right into expiration. So you don't have that extraordinary and explosive risk that most people go through. And I'm going to tell you now, okay, this is strictly from my own experience. Like, again, when people get involved in selling options, they're so just, it's alluring to see like, 90% sounds so great, but then 10% of the time, okay, the market's just going to rip you apart. And if anybody here has actually sold options, they get this, right? They get this. And again, when you trade high probability strategies and you're wrong, you get hammered. That's what 90% probability and the 10% hammer. And I like to bring that to the forefront, okay? And the market, let me tell you what markets do, especially those of you who have gone out and actually done things like iron condors. Okay, you've gone out and you've done an iron condor, and I know a lot of people here have done some iron condors. They go out and they sell an iron condor, and they do this one lot, and it's way out of the money, and they use a product called the SPX, and they don't even know what that is. By the way, the SPX is the mother of all options products, and the marketplace is very nice to you for the first time you do it, and it allows you to make money. So you make almost a whole premium on the SPX. You're like, woo, got through that one. So you do it again. Woo, got through that one. By the third trade, now you're not doing one contract. Okay. Now you're capped in 4 lot and you're like, I'm doing 4 contracts. Okay. And then by the 4th or 5th time, you've actually increased your contract size. You're like, yeah, I'm doing 10 contracts now in the SPX. You're wearing a cape running around the house. The marketplace knows. The marketplace is that evil. It lures you into, come on, a little bit more contract size. And then bam, total train wreck. Okay. And not only do you get everything that you had on wiped out, you also lost a pretty good chunk of your account. It literally wipes out the gains of the previous trades over there. And it's, and I say this because you're like, oh, it's like this guy could see my account. He knows what I did. I did. For 15 years, I could see your account. You think I don't know the way that this goes? People go out there and they sell premium and they do everything possible that's wrong. They trade too big. They do it in the SPX. Okay. They don't know. Like somebody just came into chat. Somebody just said, I'm prohibited from selling options naked. No, you're not. Okay. You're prohibited because you think you're prohibited. You don't realize that there's new products out now that you can sell anything you want, whenever you want. Okay. Listen. All right. This is not the way to go. And then what people get to is, so this iron condor, they sell it and they make money, and they take a big hit. And they come in there and they go, there's got to be a better way. All right. And they go, I can fix the trade. I know I can fix it. So the other aspect in this business is that fix is a really, really dirty word in trading. 15 years in the brokerage business. And I'm such a cynic when it comes to good trades gone bad. I mean, you have to understand this. I used to sit, okay, behind my screen at Thinkorswim and TD Ameritrade, and I'd literally watch people trading, like legitimately watch people trading in individual accounts. You'd be like, okay, we've pulled up Mike's account, and it would be like a really, really hostile day in the marketplace. You're like, oh, don't do that. I'm knocking my microphone off over here. Oh, don't do that. Mike, what are you doing? Don't go in there. It was like some horror movie that you knew exactly how it was going to end. Okay. Listen, you're trying to fix a trade. All you're doing is just get out a shovel and just keep digging. Okay. Anytime you're fixing a trade, you're adding more risk, okay, more capital, more transaction costs to an already losing position. Everybody knows that you don't want to rack up more losses in a losing position. Fixes sometimes may work. Okay. The very notion of trying to fix a trade is literally throwing good money, okay, into a very, very bad hole. You got to understand something about this business, about fixing bad trades. You got to throw it out like yesterday's trash. You take a car, and this is the best analogy I can think of. You take a car, you drive it off a cliff, and you bring it to a body shop. The body shop is going to tell you the exact same thing, okay, about your car as I would say about a losing trade. All right. It's a piece of crap. Let it go. I mean, literally, you take a car, drive it off a cliff, bring it to a body shop. You just basically have a wreckage. They go, we could turn that back into a car. It'll only cost you more than the car will cost you. Okay. Listen, you got to do this right. You got to learn, okay, to mitigate risk and exposure the correct way. So all I've done so far is I've showed you a little bit about selling premium, a little bit about what Ultima Trades is, a little bit about how we went out further in time. And again, I went out further in time And it allowed me, okay, to have very, very minimal risk, very, very minimal risk, extraordinarily high returns, okay? But I'm not giving you yet kind of the full picture, the full Monty. I'm going to give you a little bit more of that right now. Okay, what you're looking at right now, once again, is distribution curve. This distribution curve, let's call it the spiders, let's call it the IWM, call it anything you want, all right? We're going to call this the SPY. And where's the spider trading at right now? Everybody know? Okay, pull it up here, 391 and change. Okay, so we're going to go into the SPY and we're going to look at it. It's 391 and change. So 391 in change. So a moment ago, I just went out and sold what? You just saw me sell, okay, a 435 call. So I sold a 435 call. I'm probably also out there going to sell, okay, all the way up to like a 4, for instance, 50 call. At the exact same time, I'm already short and I've already sold, for instance, a 430 call. I don't put on 3 trades to intimidate you. Okay. Stick and move, scatter your positions. Scatter your positions. Why? Okay. You want one big trade on? Because one big trade is one big disaster waiting to happen. Control your risk. Okay. By putting on a multitude of positions. The exact same time. Why would I be doing this on one side of the marketplace? Why couldn't I also mitigate risk on the opposing side of the marketplace? So here I am, $40, $50 out of the money. Okay. That's actually $60 out of the money, right? Why couldn't I do the same thing on the opposing side of it? Why couldn't I be selling in this case? What? All right. I might be able to go all the way out to the 330 puts. Now, I haven't really even covered puts for those of you that are brand new. Okay. So I can go to these 330 puts. Maybe I turn around and sell some 320 puts. Okay. I might even be able to sell the 300 puts because there's that much skew right now in the marketplace. Okay, there's that much skew. So now I've effectively sold both sides of the marketplace. What do I want the marketplace to do? Absolutely nothing. Now, before I go any further, is the market going to do nothing forever? Is it? You guys tell me. So you look at this and you think to yourself, like, he's crazy. You just can't just go out and sell premium naked. Nobody said anything about selling premium completely naked. All right. All I'm doing right now is just alluding to the logic behind this. As I was saying a moment ago, like, I could go all the way out here. Look at this. Look at these. The 300 puts, they're still trading for 250, okay, 254. I mean, that's 93 days out. Maybe I should go 121 days out. Look how much premium there is out here. I'm all the way to like a 10 delta to 293s. The marketplace would have to crash, okay, by what? From 400 to 300. The marketplace would have to lose 25% of its value, 25% crash in the marketplace. And you're like, in the next 120 days is possible. Nobody said I'm going to hold the trade for 120 days. Okay. I could actually hold this trade for a couple of weeks and probably produce a lot of that $3 in my pocket. And think about that for a second. Again, it's low risk. What I wanted to show you though is how much premium is out here. I mean, let's talk about ridiculous numbers. There's dollars, okay, waiting for everybody that's way, way out of the money premium, way out of the money premium, but you have to know how to mitigate the risk. Okay, what Ultimate Trades really breaks down to is simply this, all right? And I'm gonna make this as clear as I possibly can, okay? We're gonna go out and we're gonna sell out of the money premium. And I'm gonna use products to begin with, like SPY. And the SPY is trading at 391. I'm gonna go out here and sell, okay, a few out of the money options. I'm going to come out here and I'm also going to sell a few out of the money puts. Inevitably and eventually the market will do what? The market will either rally massively, okay, or it will crash horrifically. We're positioned for this. We're ready for it. Bring the pain. What do you mean? If the market crashes, I am actually using a combination, okay, of what we term, okay, risk twist spreads, okay? I am actually using something called a VIX vol spread. That's actually a VIX related trade. And I'm even using what's termed a gamma iron, okay? And what these trades do is with, okay, very temperamental moves. What's a temperamental move? A wild move up here, a wild move down here. If the marketplace takes off to the downside, the VIX volatility spread comes to life. What does it do? Softens, okay? We crash, the VIX volatility spread pushes, okay? and does what? Softens the blow that you would take on any one of these trades. Okay, the risk twist softens the blow. The gamma iron produces what? Profit to actually hedge the upside. What Ultima trades is, it's actually a system whereby I'm selling skew and mitigating risk using a number, okay, of alternative strategies. In fact, if you want to see kind of the full Monty of this, right? Now I'm looking at all of my accounts right now. I'm just going to actually knock down. Okay, when I say knock down, you're now looking at a Theta portfolio. You'll see a trade in here. Okay, and I'm just going to show it to you really quick. You'll see a trade in here, right? Okay, here. This is actually a VIX position. That VIX position, it's up 500%. That's because the VIX position is offsetting this one. Okay, I needed an offset. Why? Not doing so well in the IWM, so the VIX is actually offsetting it. Okay, there's also a position in here in junk bonds. This is nothing more than a hedge. Okay, junk bonds is a hedge just in case the marketplace crashes. Junk bonds will probably crash with it. It's a hedge. This is risk mitigation. This is what people need to learn. And this is actually the Ultima Trades portfolio. This is literally me producing a portfolio, okay, that everybody can watch, and you can watch it in real time in how to sell premium, how to mitigate risk, again, and how to create, these ultimate trades in what is an incredibly favorable development in marketplaces. Listen, this is why you want to sell premium. So premium can now be sold in small accounts, even if you have under $5,000. Now, without going into incredible detail, this is the thing that everybody constantly is like, whoa, how can I do it? Okay. Well, that's exactly what we show you. You can now sell premium in accounts, okay, 2,000 bucks, 5,000 bucks. Sure. Is it easier to do in $1 million account? Yeah, the world's easy in $1 million account. Like, I get it. Okay. But everybody has to start from somewhere. You have a $2,000 account. You couldn't have done this 3 years ago in a $2,000 account, but you can now. New products have emerged in the marketplace. Those products are more than liquid enough. Those products do not tie up margin, okay? And do not ever let your brokerage firm tell you that you can't do something, because we have relationships with the brokerage firms, okay? And we'll tell you, yes, you can. And we will get you approved to do what you want if you have $2,000 or $5,000 in your account, okay? The next thing, okay? We produce positive theta decay. I mean, this is why you want to sell premium. Produce positive theta decay. This is about income generation. This is about, potential monthly income. We got to keep you consistent. And again, just because you're selling an option for 93 days doesn't mean you have to wait 93 days. You're like counting your chickens for 93 days. It's crazy. You sell an option for 93 days, you're pulling it off, with 58 days left. You sell an option with 120 days, you're pulling it off with 90 days. You're constantly opening positions, closing them, opening them, closing them. Why? Because we want consistent potential income, right? You can also use selling premium to enhance existing positions, provides an incredibly high probability of success. You never need to buy or sell the stock. Like, there's no reason with premium selling, especially with today's skew, okay, that you need to buy or sell stock. And there's one aspect that I haven't even brought up today. What about direction of the marketplace? What about direction of the marketplace? I'm selling way out of the money premium. You can be wrong on market direction, dead wrong on market direction, and still produce profitable trades, profitable returns, okay? And I'm telling you right now, with the kind of skew we're seeing, you need this in your life. Listen, selling premium to potentially bring in consistent returns while minimizing risk, while mitigating risk. Okay, you can even use some of the techniques, all right, to mitigate a current portfolio exposure. Like, if you say right now, well, I have a 401k, what can I do with my 401k? All right, we can show you how to use some of the techniques like the risk twist spread, like the VIX volatility spread, to reduce risk of those portfolios, right? And if you'd like to learn how to sell premium and minimize your risks, okay, let's talk a little bit about criteria. And this is what I was referencing earlier. Here are a few live trading, okay, examples, a few variations. Listen, by the way, variations of all of the following trades can be done in an account with as little as $2,000, okay? And can also be done now inside retirement accounts. And I've said that like 5 times because In the past, again, you couldn't do this stuff in retirement accounts, and you couldn't do this stuff inside of what? The average brokerage account with 2 grand in it, and you can now. When I say there's a couple live trades here, okay. This is here. I'm going to start with some short premium selling. I'm just going to show you a few trades. You know why I'm showing you these trades? Okay. I'm going to tell you right now. I picked out a few trades to display to you on this particular presentation that were formidable in nature. And when I say they're formidable in nature, this is Tesla. Okay. And I would assume that most people think Tesla's formidable. Tesla as a stock has pretty much gone straight up. And the reason I want to show you this is I was selling calls, and selling calls is technically speaking kind of a bearish trade. But as I'm selling calls, okay, I still returned 83%. So you can see the exact date and time of the trade. This is the opening position. Okay, this is the closing position. And this is the exact price that I sold it for and the exact price that I bought back. By the way, if you've never seen this before, okay, this is just a screenshot from Thinkorswim. So if you want to see my real account statement here, here's my real account statement. We go into Tesla. Let's go more than 30 days back. Let's go to Tesla and go, I don't know, 100 days back. Okay, so if I go to Tesla 100 days back, I don't trade Tesla a huge amount, but this is where the screenshot came from. Look, in the screenshot, what did I do? Right here, there's the 390, bought it back for 65 cents. Okay, here's one. Apparently I sold this little monkey, closed them. But here, just to break it down and make it a little easier, I did break these effectively into screenshots. So again, I opened this, okay, which is the 950 call. Okay, then I turned around and closed the 950 call for an 83% return, right? Here's another Tesla short call. And the reason I'm showing you Tesla is, again, there couldn't have been a more formidable underlying, a more scary, if you will, trade, because Tesla was going straight up. But, well, I'm going to show you an interesting trade in Tesla in just a moment. I sold a 950 call for $4.25. I bought it back for 42 cents. It's a 90% return, 90% return inside of 7 days. Okay, here's another Tesla trade. And I'm just throwing them out sequentially because, again, it's the most formidable underlying. Here's one I sold for $4.50. I bought it back for $1.90. It's a 58% return. I also want to elaborate upon one aspect. Okay, if you did one contract, options trading contracts, if you did one contract, this would be what? Okay, $450. You buy it back for $1.90. So that's 450. You're buying it back for 190. But if you did, for instance, 10 contracts, that's 4,500, buying it back for 1,900. Everybody get it? You can obviously amplify some contract size here as we go. So I wanted to show you one of the most formidable underlyings in the marketplace. You want to see? Okay, because this is where everybody, they freak out when it comes to something like Tesla. Let me show you another interesting trade in Tesla. Okay, how many people here think Tesla is going to double in the next 30 days? Is Tesla going to double in the next 30 days? And I like what somebody said. Okay, Tesla, see, everybody's worried about buying power. Okay, can Tesla literally double in 30 days? Okay, probably close to impossible. Why? Why is it close to impossible? If you take a look, whoops, swing and a miss. Okay, if you take a look at the market cap of Tesla, Tesla is a $750 billion company. If the stock doubled, it would be $1.5 trillion company, which would only be basically what? Neck and neck with something like Amazon, not quite Apple, but something like Amazon. Check this out. Go out, okay? Go out. 93 days. Did you know that the 1,700 calls are trading for $5.40? $5. $5. And if you held those, okay, if you held those just for what? Oh, I don't know, 35 days, they're only going to be worth $2. So you can make about 60%, okay, in holding those for what? A couple of weeks. That's all I'm doing in here. Like this one ain't even rocket science, but immediately people come in there and go, I can't do it. I don't have buying power. You can do it. You just have to learn the correct ways to do this. So this is a Tesla short call. And Tesla, I'm going to tell you right now, Tesla is not for everybody. Tesla, I'm showing this one because this is a formidable underlying. This is a product that I think takes a very experienced hand. Okay. Here's one that you never even dreamed of. Okay. Bonds. Okay, here's bonds. I sold them for 14 ticks, bought back for 6 ticks. People go, I don't even know what a bond is. I made 57% return. Bonds tie up extraordinarily small amounts of margin. Bonds can actually be a great trade, especially right now. So this 57% return. Here's another bond trade. Okay. By the way, these are all recent. I hope everybody realizes recent trades. I mean, this is January, February. Here's bonds that I actually sold 15 ticks, bought them back for 7 ticks, 53% return. Here's IWM. By the way, I do a ton of IWM trades. Okay. I opened this trade for $1.46, close it for a 56-cent debit, 62% return. Here's another one. By the way, this is closed just what, 2 weeks ago. So for a 53% return. Here's another Tesla short call. Okay, this one was closed just a few weeks ago. This is about 3 weeks ago for a 76% return. If you haven't noticed, I don't mind using Tesla because, as I said, it's a formidable underlying, and I think it intimidates most people. But I'm telling you, there's no intimidation necessary here. This is a 1,575 call. Okay, again, the stock would literally have to double for me to start taking a hit here. I sold these for 266, bought them back for 64 cents. Here's spiders. Okay, now we're actually coming in some really recent trades. This one's actually done for a 60% return. Remember, you can do Captain 1 lot, you could do 10 lots, you could do 50 lots. It's your own comfortability, but do not be intimidated. By the way, this is a SPY short put. Okay, here's another SPY short put, getting a 50% return, more recent. Okay, here's another SPY short put, sold it for 284, closed it just a few days later for $1.39, 51% return. Okay, here's another SPY short put, another 50% return. Okay, all I'm doing, okay, is scattering small trades. Okay, but if you're collecting $100 here, $200 here, $1,000 there, people, this adds up. All right, I'm telling you, this is what you need to learn in this business for income generation. This is extraordinarily high probability, okay, with risk mitigation behind it. And this is one of the better times, okay, that we've ever seen. And, speaking of that, what better time to actually learn it, okay? Because you're going to learn a skill set that's going to last a lifetime. Like, when are you ever going to have time like this again? And I say that because a lot of people are probably working from home. If you're not working from home, all right, you may actually even be out of work over there. If you're still working, you can do this very, very part-time. If you're quarantined, this is the way to emerge stronger and in better financial shape. You learn so much about Ultima trades and so much about premium selling. Okay. Again, this is the time to deploy in this marketplace. What our members are saying, this is actually from Daniel Fabian. I just took a smattering of different dates here from Daniel Fabian. Hey guys, new member, been lurking in chat for about a month, was short the SPY. TheoTrade is the only membership that I've ever had that pays for itself and then some. The other one that comes down, Brent W. You won't find a more supportive and more profitable room anywhere in the retail business. I just wanted to throw that out for a moment. And the trades that I'm showing you today, like this is not sit in front of the computer all day long. Okay. Hey, listen, I don't mind telling people, okay, I have traded for, well, this is, 22 years, started trading in 1998. So I'm in my 23rd year of trading. I do have tendency to sit in front of the screen quite a bit during trading sessions. Okay. Why? Because it's been my business and it is my business again for the last 23 years. Right. But the strategy that I'm showing you today, this is pretty hands off, like selling premium. Okay. You just have to get the tactics down. You got to get the logic down. You got to get the risk mitigation down. Okay. And then it's hands off. Like, I don't want you to think that you have to be glued to the screen. Every trade that I've shown today, all the trades that I just showed, like the live examples, were displayed live at TheoTrade. So the trade results are really, they're perfect for part-timers. Okay, you can even use like good till canceled orders to buy the stuff back. When I say that, I mean GTC. It's good till canceled order. It's kind of what they call a set and forget order type. So even a fraction of time is enough to see results. Okay, so don't think you have to sit in front of the screen all day long. Here's a couple of characteristics of selling Ultima Premium. So I think that most people recognize the attributes of selling high probability premium are undeniable. Okay. And again, you never have to buy or sell the stock. Obviously, that has a huge attribute to it, specifically because if you look at markets today, like I think a lot of people probably would say this, like the markets are pretty fully valued right now, like scary valued, right? Okay. The risk in buying stock alone could be tremendous right now. So you never have to buy or sell the stock. The risk is like in selling premium, the risk is dialed into precisely your comfort level. So that's why I was like, you could do one contract, you could do 10 contracts. Okay. I showed Tesla because it was incredibly formidable. You don't need to necessarily trade Tesla. Okay. You're never going to use a stop order. Okay. Stop is a 4-letter word around here. You don't need stop orders of any kind. And I say this because I don't want you, again, to think that you're going to have to sit in front of your computer and be like managing risk. Go, oh my gosh. Okay. Listen, you can also vary timeframes in here, and that can actually help minimize your risk. That's one huge concept. All right. The probability of profitability is extraordinarily high. This is a perfect strategy as well. Like selling premium, you can use it if you do have a stock portfolio or you do have a 401k. And I know that you can't touch your 401k. Everybody's like, my 401k is tied up with Vanguard. I can't touch it. You can. Okay. You can actually sell premium in an account over here, all right, against the 401k. So it's literally, it's your capital against your capital, but it's done in 2 different accounts. Listen, it's an excellent tool for those seeking returns, okay, to build an account. But it's also an excellent tool for those, you have a $2,000 account or a retirement account. And again, I really want to hammer that, right, is that new products are allowing us to be able to sell options premium in really any account size. Now, you've got to actually learn to build a portfolio of options. I don't want you to think of this as like, put on the trade, take off the trade, put on the trade, take off the trade. We're going to build a portfolio of options. Do not let options intimidate you. Selling premium can be done, okay, for minimal credits, but it can also be done for minimal risk. But the sale, okay, of premium, it's akin to a massive power saw. And I said this earlier today, and I'm going to say it again, that, options, the greatest analogy for options is if you wanted to go out and you wanted to build a house, okay, you're going to have some big power tools. All right. You're going to have table saws, and, those table saws are going to get through those 2x4s and 2x6s cleanly, quickly. But if you've never used a table saw before, you can lop off a couple of fingers. Options are going to be the exact same thing. Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace. But if you do not know how to use options correctly, you can lop off a couple of fingers. And you need to know that, okay? Listen, you can sell Ultima Premium and you can minimize risk. Maybe you know nothing about options or you have limited options experience, okay? Again, do not let the options side of this business intimidate you, okay? You're going to need these strategies for the foreseeable market future. Okay. We can show you how, and we can show you when to sell premium in a matter of a few hours. Okay. And I love this sign over here. Be prepared. Don't freak out on me now. What we do here at TheoTrade is we create detailed recipes for every strategy, including, okay, selling premium, including, of course, the Ultima premium selling strategy. And what that kind of breaks down to is you wouldn't bake a cake without a recipe, but people trade without one. I mean, how many people here are actually willing to admit that they've probably gotten into a couple of positions? You're like, I kind of knew where I was going to get out. But why'd you get into the position? I didn't really know when I was going to get out. Come on, admitting it's the first step today. How many people here have some piece of junk stock left in their portfolio because they got in it as a day trade and they ended up holding it for the rest of the foreseeable life? And it happens to people. I'm telling you, that is not trading off of a recipe. That's not having consistency. And what we do here at TheoTrade is we create that consistency, we create that discipline for you, and we do it, okay, through a series of steps. We do it through criteria, okay? This is what you need to know to successfully sell Ultima Premium for a living, okay? First, you got to know what underlyings, what stocks or indices make the best Ultima Premium selling candidates. And when I say that, again, everybody looks at this stuff and they immediately go, well, I'm going to do it in here, and I'm going to do it in here, and I'm going to do it in a GameStop, and I'm going to do it in a silver, okay? You're going, okay, to crush yourself. There are highly specific, okay, and detailed, okay, criteria to get you into the right candidate. I don't mind saying stuff like spiders. Hey, listen, it's one of the most liquid products on the planet. IWM, one of the most liquid products. But we start talking about stocks. Whoa, cowboy. Okay. Stocks, people, don't be a moth to the flame. Why do you care? Like, I got to be an AMC. Some guy talked about it in a chat room. I got to be part of GameStop. It's part of me now. What do you care? As long as you can produce, okay, Income, why do you care what product you trade? It could be XYZ, it could be GameStop. It does not matter, right? It's just a couple of symbols. It just has to have the right, okay, volatility, which is exactly the next step. What volatility should I seek out? You got to have the right volatility. Too much volatility, you're going to cook yourself. Too little volatility, and you're also going to cook yourself, because too little volatility is indicative, all right? There's no risk in the product until there is risk. I mean, like a Walmart, that's like watching paint dry. Yet we have to have the right volatility. So not only do we have to have the right candidate includes the right volatility. Then we have to start to whittle down, what expiration cycle do I select? And this is a fun one. We start talking about expiration cycles, right? We talk about like expiration cycles in here. We go into something like the SPX, the mother of all products. So we go to the SPX, and when I open up the SPX, look at this: 7 days, 5 days, 9 days, 12 days, 14 days, 16 days, 19 days, 21 days, set, hut, hike. I mean, there are so many different expirations in here. Maybe I should go 120 days out, 100 days out, 93 days out, 92 days out. Look at this. Okay, 72 days out. Which expiration? I don't know. You got to know the right expiration. And I actually showed you a little bit more probably than I should have today, but I'm telling you, do not run out, okay, and try to sell options with 92 days, okay, unless you know how to mitigate the risk, right? What should be the delta of the option I sell? For a lot of you, you're like, I don't even know what delta is, so I'm good there. Like, what should be the delta of the option you sell? You got to zero in. Delta is the same as akin to probability. You got to like tune into the right probability, right? What options do I buy against my positions? This is the hedge. This is the risk mitigation. This is the side of the business that I didn't show you today. It's also the most important side of the business. Risk mitigation is everything. You can be right 90% of the time. You go, then how do I make money? I'm going to be right 90% of the time. I'm going to make money, right? No, because 10% of the time you're going to get hammered. Okay. What we're going to do is we're going to show you that the 10% of the time, normally when you got hammered, with the right options to buy, it's going to mitigate your risk. Okay. How do I actually build the position? Like literally, how do you go out? Which options do you sell? Which options do you buy? What expiration cycle? There's a lot of what if questions over here. Do I need, okay, a large amount of capital in my account? Absolutely, unequivocally, no. That one's kind of rhetorical at this point. You do not need a large amount of capital. $2,000, $5,000, you're fine. Okay. What is the right amount of risk for me? We help you dial in, okay, specifically the right amount of risk, okay? What are the percentage returns supposed to be? You don't leave these trades on forever. You get in, you get out, you get consistent. This is about potential profitability, potential income on a month-to-month basis. That's why I said, I don't care that somebody goes, I should sell options that decay fast. No, you shouldn't. You should sell options that are further out in time. They decay a little bit more slowly, but I can still return, okay? Very large returns without taking huge exposure, right? How do I protect myself from market crashes when selling options? Risk twist spreads, VIX volatility spreads, risk mitigation tactics. Look, let me show you what we do here at TheoTrade. TheoTrade creates recipes in trading. And I'm talking about criteria consistently here. But what a recipe is, trading's all about answering the what ifs. That means like, what might be a good stock or ETF candidate for me to sell premium? Okay, what's correct options expiration cycle to do this in? How much capital do I commit to generating premium? What strike price options do I sell? What strike price options do I buy? How can I limit my risk? By the way, I could go on and on. Which ones do I actually use? Listen, what we do here is we answer those questions. We build recipes with definitive criteria, literally checklists for each unique strategy and each unique variable that you're going to encounter. The idea of a checklist, just so you guys know where it came from, okay? This is a pre-flight checklist, similar to if you were going to fly an aircraft, okay? And in coming up with all of this detailed criteria, that's often what we think about is, all right, you got a pilot that hops into the cockpit of a 747. They don't just turn a key and, hit the throttle up, and we're off, okay? They sit there and they actually go through a detailed checklist, but more importantly and more appropriately, and I think people understand that they go through this detailed checklist, like, there's wings, check, okay? There's a throttle, check. Nothing is falling off the aircraft, check, okay? We're doing the same thing. We'll actually give you the right underlying, okay? The unique volatility, the different strike prices, the expiration cycles. What if dividends are coming? Okay, what if expiration is coming? What if there's assignment risk? What if there's a crash in the marketplace? Here's the most important thing. Once you get into the position, then there's different variables. What if we go up? What if we go down? Okay, listen, that's what we do here at TheoTrade. TheoTrade is the answer to your questions. We'll give you the right probability for the trade. We'll give you how many option contracts for the account size. When do I close my premium sale? What if the stock rallies big? What if the market sells off big? When do I bail out of the trade? Can I fix losing positions? We'll give you, again, every single variable, the how, the when, the why, at what price. And I'm telling you right now, it's just the beginning of the variables that you're going to face, okay, while selling premium, specifically Ultima options for a living. And in doing this, you have to go through and you have to know the how, the when, the why, at what price. Listen, you can read all about selling premium. Like people read about selling premium. You can read about selling Ultima premium. You can read about that on Google. Right now, you can probably Google the sale of options. Serious. You could Google that, 10,000 pages are going to come up. Okay. Maybe you even know how to build a few trades. A lot of you probably have. You're like, yeah, I did iron condors in the past. I know exactly what you're talking about. I've sold a couple covered calls. I know what you're talking about. You don't. Because I'm telling you, to be successful in here, you're going to need TheoTrade's recipe for success. Okay. This is just my experience. I have 20 plus years trading experience. That's just me. TheoTrade, though, is not just me. It's not just Don Kaufman. We have 7 other full-time instructors. I had access to client order flow for 15 years. Okay. What do you think we were doing at Thinkorswim and TD Ameritrade? Right. To run the education division of Thinkorswim and TD Ameritrade, we access big data from hundreds of thousands of client accounts to see what did those do that were successful in selling premium. Like, what do they do? Specifically, how do they mitigate risk? That's why I say viewed and studied millions of trading accounts. And again, this is how we start to actually come into and build some of the criteria. I'm telling you right now, criteria is your recipe for success. The following strategy, which is Ultima, all right, and the Ultima premium selling system requires the utmost attention to detail. We've spent years, the better part of my career, in fine tuning this trade setup, okay? And when you approach this section, all right, on criteria, you have got to follow the steps to build a trade. We built, an entire course for this. It is up and coming. When I say we built an entire course, it's built. It is ready to go. The course is going live February 23rd for 3 hours and February 24th for 2 hours. I actually broke the course into 2 separate days. Now, time out, I am the course instructor. It's called Ultimate Income Generator. All right, the course is broken into 2 separate, days. The first day, is logic. The first day is also some of the specific opening criteria. The second day is much more about smaller accounts and risk mitigation tactics. Everybody needs to go through, the full 5 hours. And I don't want you to think like, listen, all right, you got to go through the full 5 hours. You have to learn step by step how to get in these positions, how to get out of these positions, how to mitigate your risk in these positions. That course, if you cannot make it live, is archived immediately. The live presentation is archived instantaneously. We will give you 24/7 access. And there's download capability on TheoTrade mobile. So we have our own mobile application. The mobile application, when I say that, both for iOS and Android, the class slide deck that includes all the entry and exit criteria, we will make it available for download on February 23rd. Before anybody freaks out, I want to go through some details over here. And I'm actually going to take you through the course curriculum in a minute, but hang with me for a second, because what TheoTrade is, differentiates from really anything else out there. Listen, I spent 15 years building the education division of both Thinkorswim, and of course, TD Ameritrade. And when it comes to education in this business, I've seen everything that's out there. And I get, that people, they've gone to a lot of classes. Listen, a lot of people, first of all, have gone to a lot of classes that cost $500. So you pay $500 for a course, and then they charge you another $500 for an indicator. Okay, but then you have to take another $500 class to learn how to use the indicator for the original class. It's ridiculous. Okay, before I go any further, what we do here at TheoTrade, we are not in the business of selling you one autonomous class. You will learn Ultima income generation, okay, at this specific course. However, we go way beyond that. We will provide you every nuance to support you from beginning to end, from absolute novice to the most extreme trader. We support you in every way, shape, or form. When I say support you, okay, I'm going to show you here momentarily. Okay, we do not sell individual courses here at TheoTrade. Yes, we would love everybody to learn Ultima income generation. Okay, but that's not, okay, what TheoTrade is in terms of a system. You will get, when I say everything, every course, every indicator, okay, it is all included here at TheoTrade to take people from absolute novice, as I said, to the most extreme. So hang with me for just a couple of moments, okay? Number one, there are numerous bonuses that go along with the Ultimate Income Generation course, okay? Number two, we are going to have quite a discount for you for those of you that are interested in doing this. And again, we want you to know right up front, everything that we do here at TheoTrade is completely inclusive, which I'll explain here momentarily. First and foremost, all right, here's some of the course curriculum for Ultimate Income Generator, okay? So you're gonna learn, obviously, how to generate consistent returns with selling options. In the curriculum, okay, how to build a portfolio of high probability trades that's designed to generate consistency, consistent monthly returns, regardless of starting capital. And again, we have specific sections in the course that are going to be like, all right, this is for people that have, $2,000 or $5,000 in their account. You're also going to receive detailed entry and exit criteria for selling options premium while keeping your risk at a minimum. You're also going to discover a little bit about Greeks, how to manage risk through one easy number. So we are going to talk about what's called a risk array in this, all right? So learn to use the risk array in order to visualize your profits and risk, okay? How to properly allocate. There's an entire section in the class for allocation. Doesn't sound exciting, but it's critical, okay? Because it's going to actually make this and the management of the position much more hands-off. You're going to discover risk, okay, mitigation techniques designed to hedge some of the most extreme market environments. This is VIX volatility spreads, it's risk twist spreads. You're never going to get caught off guard by what happens in the marketplace. And you're also going to learn how to sell premium in small accounts and or retirement accounts with innovative, okay, new trading vehicles that have never really been available before. I mean, we're looking at products that only been available, the last, year to like 18 months, and that's critical. And before I go any further, okay, anything we offer here at TheoTrade, anything we offer now here at TheoTrade, TheoTrade is now a completely riskless trade. And this is the first time we've actually done this in this manner, okay? There's a money back guarantee. Listen, I'm going to show you all the different bonuses. I'm going to show you a bit more about, okay, ultimate incomes for generation. But here's the money back guarantee. If you're not completely satisfied in the next 90 days, email us. Anytime in the next 90 days, just email us, support@theotrade.com. Receive a full refund, period. No if and or but about it, okay? There are no money back guarantee stipulations. That's what's changed. We used to say, you got to trade with us. You got to trade with us for a couple of months, okay? There's no stipulations whatsoever. There's no excuses. You don't have to come up with this excuse, my dog got hurt. I don't care. No excuses, no questions, no commentary needed. Email us, okay? Ask for your money back. If you're not completely satisfied anytime in the next 90 days, okay? We get it. And I'm telling you that up front. I haven't even told anybody what the bonuses are, but we're telling you this up front because we now have over 6,000 clients here at TheoTrade. I want to make sure each and every one of them, okay, isn't just satisfied. I want people to be, enthusiastic about this side of the business. If you go right now to theotrade.com/skew, theotrade.com/skew. S is in Sam, K is in kick, E is in echo, W, theotrade.com/skew. You can enroll for it right now. Now, as people are hopping over to that site, okay, I'm going to take you through a couple of the bonuses. By the way, that site, I'll actually bring it up here on the screen momentarily so everybody can see it, okay? bonuses, all right? A couple of bonuses. Like we get, when we were talking earlier here, TheoTrade. And TheoTrade, it's important to us that we go beyond one class or one indicator. Like we understand that people want everything to trade, they want everything to invest, they want it at one place and they want it at one price. So the first bonus, okay, it's the starter's guide, right? And it's our entire library of start here videos. So if you've never put on a trade before, okay, we're going to give you an entire training. All right. It'll take you from absolute newbie to being able to enter your first trade. I'm just going to show you right now. This is the first bonus, right? And in this particular bonus, when I say it's like the start here guide, right? It's start here. You've never traded before in your life. Start here. Options 101, options 201, options 301. I'm actually going to go ahead and say this to people though. Even if you're the most experienced trader, people look at this and they kind of poo-poo it. Order execution part 1, 2, and 3. Listen, I worked inside the brokerage world for 15 years. I will guarantee you, I will show you stuff in order execution, okay? That'll save you a small fortune, especially if you trade heavily. The order execution in here is second to none. That alone is worth the price of TheoTrade, no question about it. But that's the start here menu. So that's the first bonus. And we're throwing that in there because we want you to know right now, we don't want anybody to come in and feel like overwhelmed. We're like, oh, I'm selling premium, I'm selling premium. We're going to ramp you up. All right. Obviously, we're going to ramp you up. And yes, the class is next week, but everything here is recorded. Every word we say is recorded, right? And you can even download it and play it back on the mobile applications. So that's bonus number 1. Bonus number 2, we'll give you access to over 100 different trading classes. It's everything in our library since we've started TheoTrade. And TheoTrade launched originally in 2016. So what are some of the classes? Ultima Income Generator. Obviously, that's going to stream live February 23rd and 24th. It will then be added to the archive. What are some of the other classes? By the way, all of these classes are immediately available. They're on demand right now. And you can download them on the TheoTrade mobile application. Okay, we have the in-out spreads class. That's probably the most prolific class we've ever done here. Volatility, SPAC spreads, black book spreads, okay, how to collect income being short. Here's the risk twist spreads class, iron condors, selling premium, minimizing risk, day trading NASDAQ futures. We actually have 8 full-time instructors, including myself, okay, with 8 full-time instructors. You'd be amazed how many courses we've actually gone through in the last couple of years, but we have something in every genre of trade. You've come here today to learn how to trade Ultima Premium. You've come here today to learn how to sell premium effectively, okay? But we're also giving you access to over 100 other classes. And it's important, okay? This is important. You don't have to go through all 100 classes. I know that sounds a little bit overwhelming, okay? And it is, right? But I think for joining here, I think you'd rather be overwhelmed rather than underwhelmed. And it's amazing what we offer in this library of classes. The value is, it's second to none. It's another like $9,000 in classes alone. Okay. The third bonus, we give you an all access TheoTrade VIP membership pass free. What this basically is, it's 3 months unlimited access to TheoStream. What TheoStream is, which I'm going to show you here momentarily. Here, I'll flash it up on the screen for a second. This is live. When I say it's live, okay, this is live. This is our chat room. And there's a trader in here right now, and they're calling out setups constantly. Okay. When I say it's live, he's trading live. This happens to be an intraday trader. You might not be an intraday trader. Okay. This individual happens to be an intraday trader and he's trading futures contracts. Maybe you have no experience trading futures contracts. That's fine. We give you, okay, it's actually 6.5 hours a day, the entire market, bell to bell. I know not everybody can listen to the marketplace all day, every day, real time, and it's all recorded, but it's there for you. You have a couple of days off work, or if you're working from home right now, come on, if you're working from home, you're going to be like working on this monitor, trading on this monitor, watching us on this monitor. Again, I have 3 different monitors set up over here. Not only do we stream 6.5 hours a day, okay, jumping around over here, not only do we stream 6.5 hours a day, we give you real-time trade ideas. There's real-time trade ideas, real-time market insights, okay, all the analysis over here. We also do text and push notification of different trades. We have 5 unique and distinct trading portfolios. We also do daily coaching sessions with timely topics. So we have a professor of finance on our staff. I'll introduce him in a moment here. His name is Jeff Bierman, and he's a professor of finance, okay, at Loyola in Chicago. So that's all included in here, daily coaching sessions. And last but definitely not least, on this third bonus, our instructors will actually answer your email questions. And I put so much weight into that because there's all this education out there. But listen, these days, if you have questions, you can't even call TD Ameritrade. There's nobody to talk to anymore. You're going to wait like an hour on hold. There's just nobody to talk to. Okay, email us. We'll actually email you back. You can ask trade-related questions. Almost all the crew here at TheoTrade has experience. All of us, by the way, have over 15 years of experience, okay, in trading. A lot of us, though, have also had experience on the brokerage side of the business. So we give you another $1,000 in support trades and insight. And again, email us. And I'm telling you right now, that's worth it alone. Here's some of the TheoTrade instructors. Jeff Bierman, analyst trader, and he was also the former chief market technician for TD Ameritrade. Again, Jeff is actually a professor of finance, kind of moonlights with us here at TheoTrade. But if you've ever been on the Thinkorswim charts, you owe a lot to Jeff Bierman because he actually built over half the studies in the Thinkorswim charts. Next in the list, this is Matt Williamson. It's a market neutral premium selling option strategist. Matt is our kind of like internal geek. It's kind of what I would call like a little bit of like an engineer. And if you're into spreadsheets and so forth and trying to find edge, Matt Williamson is your trader. Next in the docket, Corey Rosenblum. Corey Rosenblum is also our senior strategist and resident swing trader. If you're familiar with swing trader, Corey is the best in the business at it. Corey's also authored several, fairly substantial books in the industry. One other aspect I wanted to bring to your attention, we actually have 3 individuals on our crew that actually have the designation of CMT. CMT is an extremely difficult designation to obtain. So Jeff Bierman, Corey Rosenblum, and Brandon Chapman all have CMTs. It's Brandon Chapman, CMT. Brandon also worked with us at Thinkorswim and TD Ameritrade. So Jeff Bierman obviously comes from Thinkorswim and TD Ameritrade. Brandon Chapman comes from Thinkorswim, TD Ameritrade. Brandon actually wrote a course manual at TD Ameritrade that was used, for the education. At the time we were there, it was over 7 million clients. Next in the docket, Steve, that's Slim Miller, 43-year veteran stock options and futures trader. We have courses in here, from Steve Miller. And I tell you right now, there are courses in there that's just going to blow your mind. Steve, although it says he's a stock options and futures trader, what we use him for here at TheoTrade, he's kind of our resident psychologist, our trading psychologist on staff. Next in the docket here, Tony Rago, NASDAQ futures and intraday strategist. Tony is actually the individual that I just showed you moments ago, that happened to be live. So this is Tony Rago actually trading live right now. He's our intraday strategist. What does he do? He calls out setups all throughout the course of the day. Last but definitely not least, also hails from Thinkorswim and TD Ameritrade, it's Blake Young. He specializes in market profile, futures, currency, and resident commodities trader. So this is the group, of course, that comprises our TheoTrade instructors that have helped develop, this 100 courses over here. And this is just a Zoom chat that we did the other day. It's a motley looking crew over here, but this is the entire crew, of course, at TheoTrade, all hopped on there at the exact same time. All right. In addition to this, in this third bonus, we also will give you access to 59 proprietary indicators and scans. So one thing, again, I kind of stress to everybody here, right? And this is important, stress to everybody in here. We give you every indicator, literally every indicator, that we've got. Auto expected move, S&P gravity points, TheoTrade RSI Laguerre, Quantix, cumulative tick, NQ levels, next generation squeeze indicator. This is just a smattering of some of them. By the way, the auto expected move, I'm actually going to give you the link to that here momentarily, so bear with me. IV rank, SPX expected move, unusual put options. Every indicator that we have actually developed, we provide access to from day one. And the fourth bonus today, this is the Theta live portfolio. And what this is, it is brand new. Okay. We have just launched the Theta portfolio as of January 1st. Okay. I am the trader for this. So I am the trader and trade instructor for this. So it's the Ultima premium selling portfolio. I call it the Theta portfolio, but it's a positive theta portfolio. It's all about selling premium. Okay. I'm going to tell you right now, it is completely no holds barred trading approach. You get to see everything we do. When I say you get to see everything we do, here, all right, here's the marketplace. The marketplace is open right now. This is it. All right, now I've got all my accounts totaled here, but you just take a quick glance at this particular account, right? This is part of the Theta portfolio. Here's some other trades that I happen to have on right now. But you get to see every trade we do, every trade live, okay? Every move that we make is all completely encompassed inside of the Theta portfolio. It's a full disclosure, okay, on all trades, opening, closing, hedging positions. So you get to watch me trade. I mean, I think like never before. And again, people have asked me for years, just do whatever you do, whether it works for you or not. Okay, do whatever I do. All right. And we're also, in addition to that, what I do, hey man, maybe I will sell some naked calls in Tesla. But in addition to it, we're also going to have a Theta small account portfolio. That is going to be for everybody. You have a $2,000 account or a $5,000 account. That's actually a portfolio that I'm going to be kicking off. Okay, starting possibly late next week. We've got to go through the Ultimate Trades course prior to that, right? So the Theta portfolio, it is brand new. It is our fourth bonus today. The way you get to see, when I say every single trade, everything. Theta view it on every single trade. I also do a weekly update. Okay, it's on a Friday in 10 minutes. Every Friday in 10 minutes, I take you through everything that I kind of did throughout the course of the week. It's nicely condensed. So if you feel like you can't watch a bunch of the videos, it's fine. All of it condenses inside of 10 minutes. I think last week's, I apologize, was 13 minutes, but all of it condenses inside of one video, okay, in 10 to 13 minutes. And we actually take you through every nuance of the trades that we did. Listen, what our members are saying, this one actually comes from Ken. Said, woohoo, thank you, Dom. Never sure of trades that are new to me. Yeah, they structure myself. This is great to hear. Not to brag, but this is due to you and your magnificent team. I'm up this year, 1.67 million in profit. Okay. Listen, Ken is not the norm, but Ken is also, he's a premium seller. And I figured I'd throw up a quick email from him. That one came in on August 3rd. Listen, TheoTrade, it includes everything you're going to need to invest, everything you're going to need to trade. We have classes, we have coaching, we have email access to the instructors. We have a live trading room and live trades, indicators and scans, mobile access 24/7. It's everything you're going to need to succeed in this business. I mean, what we've actually built, every genre of trade, TheoTrade has become like the Netflix for traders. All of it today, it's $297 for 3 months. Okay, there's no if, and, or, but. Okay, I also am going to tell you right now, because this question comes up 100 times over. Okay, first of all, it's $297 for 3 months. Go right now to theotrade.com/skew. Again, it's theotrade.com/skew. I'll show you the money back guarantee. Okay, there are no details about it. This is not, okay, is not an introductory offer. This is $297. This is not a membership. Okay. This is $297 for 3 months. If you want to do it again after the 3 months, fine. It's $297 for another 3 months. Everybody always asks me that. We do not do memberships anymore. I'll actually take you over to the site. So what this includes, Ultimate Income Generator course, which is going to be live February 23rd and 24th. It's included. Okay. We're going to give you access to over 100 different trading classes. All are going to be available immediately and on demand. We do new monthly classes. Okay. The live trading chat room, which broadcasts over 6.5 hours a day, 59 indicator, and scans. Obviously, text and push notifications, daily coaching sessions, and our instructors are going to answer your questions by email. So again, the TheoTrade is a completely riskless trade. And I already threw this out here, okay? But again, money back guarantee. If you're not satisfied in the next 90 days, just email us anytime in the next 90 days, okay? Just go to support@theotrade.com. Please, no excuses, whatever, all right? There's no stipulations whatsoever. you'll receive a full refund. And by the way, you get to keep the first bonus. The first bonus is the entire Start Here menu. And that Start Here menu has got some really highly detailed classes. They're worth more than the $297 on their own. Listen, get into TheoTrade now. We're going to work with you directly. There are 50 spots on the TheoTrade riskless deal. And we do that, okay, simply obviously because it's a matter of trade size, right? We trade live. And we also give you unlimited email mentoring, right? There's a huge number of people on today, and we can take quite a bit of emails, but there's 8 full-time instructors. So what we do is to kind of mitigate some of our exposure on our side, okay? We give you unlimited email mentoring, but we actually limit it to the first 50 spots. Listen, the 297 riskless offer has never been available before with Ultima income generator class plus the Theta portfolio. And again, there's a no stipulations money back guarantee. And it's important that you guys know that, okay? If somebody already asked the question again, and I'll pop the link in here in a moment. So it's theotrade.com/skew, and I'll bring it up here in a moment. But again, to reiterate this, it is not a membership. After 3 months, if you want to do it again, it's another $297. You decide at that time, okay? Like, listen, we don't do the membership. We don't think that people like that. And we have 6,000 people that are currently subscribers to TheoTrade. Clearly, okay, we don't need to have that like membership, like gym memberships that you can't get out of. So it's $297. Again, you get the Ultimate Income Generator course, which is some of the details I showed you today. You get the Quick Start Beginner's Guide. Obviously, you get over 100 different classes, okay? And I stress to you again, you don't need to watch all 100 classes, okay? You have access to our chat room, and you have access to the Theta live trading portfolio. So we're saying what our members are saying here, and then I'm going to take you over to the site. I enjoyed this one. Your organization continues to blow me away with its insights, expertise, resources, personality, and structure. I've learned so much and have been able to apply the knowledge to improve my trading exponentially. Thank you, and thanks to all your staff for everything. I'm grateful I found TheoTrade and grateful I had a sense of your organization as my mentor and the overall players in the marketplace. Now you've added Blake Young, whose style I enjoy immensely, and I'm starting to adopt. Don't know what else to say except TheoTrade's awesome. From that's very satisfied customer, Steve in Southern California. So if you guys follow me right now over here, it's theotrade.com/skew. I'm also going to tell you, I will answer all of the questions. We have a ton of people on right now, and somebody literally just said, can I answer my questions? We're going to answer all the questions. I promise I'm going to come in there. For those of you, okay, theotrade.com/skew. Let's actually pop directly over to this site right now. We have live help. Live help is easier to get in the Zoom chat. So if you cruise over to the Zoom chat, we'll be able to answer those. There's something I wanted to mention specifically on this page. Again, it's theotrade.com/skew. Somebody else again asked that. I think we put the link in there, but it's S as in Sam, K as in kick, E as in echo, W, theotrade.com/skew. There's 50 riskless spots. There are a bunch of people signing up, and I'll read the names of those that are in the first 50 spots. One aspect on here, when you click add to cart, okay, when you click add to cart, it's name, last name, email, you get this. The only reason I'm throwing this up here, the phone number, put the phone number in there because it's applicable for text messaging. Now, I recognize that some of you are out of the country. It's actually one of the questions that popped up in here. Somebody's in Singapore. That's not a problem whatsoever. If you're overseas, we also built a mobile application, and we do what's called push notification. So if you would like text messages, all right, obviously, if you're in the US, it's a lot easier for us to send text messages. Most of the texts even get to, a few other countries, but generally speaking, around the world, use push notification, which we have built into TheoTrade Mobile. It doesn't cost you any extra for that. Okay, we built TheoTrade Mobile. We give it to all of our clientele. I just wanted to throw that out there. The other aspect in the payment info, okay, I stress this so much. Okay? I'm sorry about that noise. Somebody just got scared to death. That was a fill that I just received over on Tastyworks. So it's a single payment of $297. Okay, or you can actually pay, multiple payments of $149, or even 3 payments. okay, of 300. But I just wanted to throw this out here because it's a single payment. We do not do memberships. All right. I just listen. I don't like memberships, and I've had problems getting out of gym memberships and so forth. So we're pretty like lax on that stuff. Like we don't want to jam anybody in there. It's why we do. It's completely risk free. If you do not like, okay, what's going on, we just give you your $297 back. I mean, it's literally it's that easy. So I'm going to start answering some questions over here momentarily. Again, it's theotrade.com/skew. This comes from Todd, and then we're going to jump into some generalized questions in here. It says, don't know if you remember. Okay. And by the way, there's a reason I'm reading this one email. So bear with me for a moment. Todd Summerall says, I don't know if you remember me, but I emailed you a few weeks ago and you told me that my delta was positive a couple thou or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. Before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been goner without your advice. The reason that I'm actually reading you this email, okay? TheoTrade is very, very different and very unique from a lot of education firms. We do go out on a limb. We do actually answer client emails. And when people come in here and say, I have a particular trade on, you don't have to come at us and say like, I'm kind of thinking that this, I have a friend that has a position on, and this friend that has a position on is long a couple. Listen, just ask us the question. Okay. I've had my series 3. I've had my series 4. I've had my series 7. I've had a series 24, and I've had my 66. That's the 63 and 65 combined. You want fries with that? I know how to answer trade related questions. All of us here at TheoTrade do, and we encourage you to email us. And that's why I'm throwing that out there right now. It's why I put this email in here. He even said you can use this if you want, and I did. All right. So I'm going to answer a couple of questions. By the way, in terms of the riskless trade deal, um, I'm reading off. There's 50 spots. Again, 50 spots on the riskless trade deal. And I'm just reading off a couple of the names in here for those first 50 spots. And I apologize, my monitor's like a mile away over here, so I'm going to read it off my iPad. Chris N from Minnesota, Bill S from Arizona, Bruce W from California, David P from Nevada, David S from Georgia, Vincent T from New York, Mark T from Florida. I don't want to butcher this name. Kuzama from Wisconsin, Michael S. from Michigan, Paul N. from Washington, Horse N. from Arizona, James F. from California, Daniel M. from Colorado, Garrett B. from California, John M. from New York, David S. from Florida, Mark G. from Guam. Guam, that's as nice this time of the year as where I'm at right now. Vicky M. from North Carolina, Jessica H. from Wisconsin. Wisconsin, I hear, is lovely this time of year. Franklin D. from Arizona, Gregory Pre from New Hampshire, Zero K from Texas, Min L from California, Chris M from Minnesota, Suresh H from Florida, Richard B from Montana, Marilyn M from Canada. By the way, Canada, if you're from Canada, there are specific brokerage firms that we use up in Canada. So you could also email us on that front. Gary G from Tennessee, Donald G from Ohio, Anoop from B from Missouri, Butch C from Florida, David D from Florida, Walter I from Texas, Todd E from Oregon, Jamie K from Illinois. Again, I apologize if I butchered any names in there. I am terrible with that. Now I'm going to answer a couple of general questions, and then we're going to get into some very specific questions. By the way, again, it's 50 riskless spots in here, and I don't know, but that sounded very close to 50 names. I'll have to actually have them count back in here, kind of reading, talking, and walking and chewing gum. So a few of the general questions, and then really some specific questions. People always ask, what do I need to get started? And listen, I mean, you don't need much to get started anymore. Everybody here pretty much has an internet connection. I say have a laptop, but clearly you could even use like an iPad. Okay, an iPad. In fact, if you're comfortable on trading off of an iPad, I trade off of mine constantly. I don't know if you guys can see the screen, but I trade off of this. I will literally sit in front of my my computers and I'll still use the iPad. I'm just comfortable with it. All right, that's my own comfortability, but so we have everything that people are going to need to start, from absolute novice to some of the most extreme traders. The next thing, always ask me, is this a membership? I've already mentioned like 3 times. This is not a membership. This is not a membership. We will not auto renew you. We don't bill you again. Okay. Again, if you want to do this after the next 3 months, then you ask us. And, okay, you do it after the next 3 months. Okay. Number three here, we're now providing a Theta, okay, weekly update, so you can follow all of the moves we make. That was the video I was talking about. So if you, again, I'll take you into TheoTrade for a second. So this is TheoTrade. This is actually the site. Everybody in here, these are just clients. Okay, I'm just kind of cruising back in time here. These are clients. They're all chatting back and forth. Pretty close knit community. If anybody's highlighted in here, if they're highlighted, okay, that means they're actually one of the instructors here at TheoTrade. So this is actually where we broadcast. Here's some of the actual classes. This is the class archive, option classes and option newbie classes and technical analysis classes and day trading classes and trend trading. Okay, I'll just throw this out here. I know it's $297. Just come in here, people. You're going to watch one class. You're going to be absolutely blown away. Again, I told you there's like 100+ classes in here. Come in here, like the 5 essential building blocks to successful trading. There are so much in here. Okay. Again, my genre, I'm the option geek. I'm the option geek here at TheoTrade. Everybody has their own genre of trade. How to collect income being short. Okay. Selling options premium for a living. I'm just giving you a smattering of some of the courses. Volatility crash course. Okay. Gamma irons. Tracking unusual options activity. As I said, these are just literally, okay, a smattering of some of the courses that we offer here. By the way, we literally only have right now, okay, 3 of the riskless spots left, because I'm reading it on my other screen, and I'll read off a couple more of the names. But this is just a smattering of some of the courses and some of the curriculum that we have here. And again, this is just options. When I said there's like any genre, like, please, if you are a little bit more of a day trader, yes, you should, tune into the day trading classes. If you're a market technician, they always say, the jack of all trades and a master of none. That's not what we do here at TheoTrade. Me, I'm an option geek. That's it. I'm not a big chart guy. That's why we hired Jeff Bierman. Why? He's our chart guy. Okay. So Jeff Bierman, nobody knows as much on technicals. Okay. I mean, the guy is absolutely phenomenal in terms of technical analysis, day trading. Okay. Corey Rosenblum, Tony Rago. I mean, we've got class after class in terms of day trading specific for it. Mindset, obviously we showed Slim Miller, all right? Futures and bonds classes, again, there is something for everyone inside of the TheoTrade archive. We give you access to all of it literally from day one. The Theta portfolio, we give you access to this. And again, all the trades are listed in here. And like, don't feel pressure, like I got to get them all on. I fired off a couple of bond trades. Those bond trades are still there. I'm looking at the bonds right now. The bond trades are still there. Okay. So again, we give you a weekly update on everything that we do, all the moves that we make to kind of keep you in the know. At TheoTrade, during the day and during classes, we archive everything. Every word that we speak, we archive. So we get it. Like, people can't necessarily tune in to every single day. It's interesting though, lately, pretty much since the pandemic started, on a day-to-day basis, the number of people that tune into the chat room has like tripled on a day-to-day basis. It's kind of fun now because, we used to have maybe 1,000 people in the chat room, like live. Okay. Now when the market kicks off, it'll be over 2,000 people live inside the chat room. It's good. So if you can't watch during the trading session, we archive it and you can watch it. In fact, you can even watch it on TheoTrade mobile. And there's a cool feature on the mobile application. You can play stuff back at like 1.5 times the speed, or 2 times the speed. I sound like a chipmunk at 2 times the speed. I sound like a chipmunk normally, but it is what it is. Add your cell phone number when enrolling to receive trade ideas, okay, through text message. You can also download TheoTrade mobile for push notifications. Again, it's theotrade.com/skew. You can email us anytime. Anytime you receive a response within 24 hours, including trade-related questions. And we did throw the one caveat in here, okay? I'm just going to tell you this. You can email us anytime. You can email us trade-related questions. There's just the one caveat is, do not email me with 10 minutes to go on an expiration Friday in a panic, because we trade as well. So, give us a little bit of time. Just give us a little bit of time here. In fact, I'm not even on Eastern time. I'm on Atlantic time right now. So I'm actually an hour past. So I'm usually up like 5:30 in the morning Atlantic time, I usually get those emails knocked out early in the morning. So you're going to gain access to every course TheoTrade has done in the previous 5 years. Classes, coaching, live trading sessions, all the archives are searchable. We have a search engine, name a trading topic, okay, and we have an archive on it. Variations of trades are going to be available inside of an IRA retirement account. Can be done with as little as $2,000, and we can help you get approved. One of the things that people really they have a tough time with is, I can't get approved for options. We can help you get approved for any option strategy that you want to do. All right. We have relationships with several major broker dealers. Obviously, I come from the brokerage world. Again, there's 50 riskless spots. By the way, some of the names that just came in: James B from Iowa, Canoe B from Pennsylvania, Tom B from New Jersey, John D from Georgia, David G from South Carolina, Michael B from Florida, Tom P from North Carolina, Octavio from Texas. Hey, you have power today in Texas. How very nice. Okay. Colin C from Alaska, Martin L from Massachusetts, and Mark B from Virginia. There's literally one spot left right now on the riskless spots. I'm going to go back now and I'm going to answer really specific questions. Again, it's theotrade.com/skew. Let me actually pull up a page. I want to show you once again right here. Okay, on the Ultima income generator page. Again, click add to cart for those of you that are enrolling. The link to the auto expected move indicator is right down here at the bottom of the page. As you're enrolling, you need not click on that link. All right, you need to click the add to the cart, but you don't have to actually click on the auto expected move. We have that inside the TheoTrade site. Again, all the indicators that we use here at TheoTrade. When I say all the indicators, they're like, oh, what do you mean? Okay, look at this. The marketplace has rallied back. I use stuff like this. This is actually Quantix. Okay, this is something that we built. So I use Quantix. I use auto expected move. I actually use an implied volatility range quite often. We use the TheoTrade RSI. All these indicators, which have been coded for us, are available to you. Okay, so all right, let me answer some of the more specific and more direct questions in here. All right. David said, I got to know how to do this in a small account. All right. So I'll give you a little tip. Okay. The product that's on the screen right now, okay, there's also no day trading margin restrictions. So there are brand new products that are similar to the product that's on the screen right now. And there are no day trading margin restrictions in those particular products. So just going to throw that out to you. By the way, I'll throw this up here on the exact same time. It's theotrade.com/skew. All right. Rob said, what range of monthly returns can we expect? One of the things, Rob, I got to tell you about, like, people always ask about returns, Returns are incredible in terms of variation depending upon the amount of capital. I'm just going to give you like yearly numbers here. Listen, if you come here with a $5,000 account, you can definitely double a $5,000 account. But I'm going to tell you right now, you're going to have a lot of risk in that $5,000 account. But you don't trade a $5,000 account the same way that you're going to trade a $100,000 account or $1 million account. What I'm saying is that allocation is not by any means a linear standard. So if I tell you that somebody's like, oh, they can make 25, 30%, or they can make 100%, it's completely non-linear. And so we have to actually go into details. That's something I answer on a one-off on an email. If you say, listen, I have a $250,000 margin account. By the way, a margin account that's $250,000 might be able to do a lot more, okay, than you may have other materialized other than an IRA that's $250,000 versus a $5,000 IRA. If you have a $5,000 IRA or a $5,000 margin account, they're almost one and the same. So allocation, okay, allocation and capital usage it's dependent. Like, you got to have those numbers nailed down to give somebody any type of like decent return statistics over there. So somebody also said selling option ties up a lot of margin. Most brokers say you need a lot of experience. You need absolutely no experience anymore. There are multiple broker dealers that no longer have levels of options trading, and we actually work with those particular broker dealers. So and also tying up the margin is negligible these days. Um, all right. By the way, somebody said, what kind of account could a 16-year-old open? So if you're under the age of 18, the principal would actually have to be an adult. So the 16-year-old technically would not be able to have. It's a the account can actually be opened in the name of the 16-year-old, but it is specific that the guardian has to actually have control of the account. So continuing on over here. Oh, somebody's saying, could I do the same for far out of the money in out spread? You would not want to use a far out of the money in out spread, not like I'm using these ultimate trades. And again, these ultimate trades, selling premium has really come back into vogue. And it's been a couple of years since selling premium has been anywhere near this good. And I'm going to tell you right now, as long as retail clients are in this business, and they're in this business right now, the sale of premium is going to be wonderful. There is so much skew. That's actually why, if you look at the web address here, it's theotrade.com/skew. And I was trying to come up with like a short link, and I'm like, skew. I mean, the whole reason for this class, is skew. Unequivocally, it's skew. And it's massive. And it's because all of these new retail traders. Okay. So somebody said, so you sell out like 3 months. How do you know when to close out? Okay. So we give you specific criteria within the Ultima income class of percentage returns of when you're supposed to close. Okay. But then we also provide you drop dead closing dates. When I say drop dead closing dates, win, lose, or draw, you got to get out by this specific date. So there is percentage returns that you're supposed to make, and then there's what we call a drop dead date, right? For both gains and losses. There are absolutely unequivocally no stop orders that are going to be used here. I am a very, very large advocate of not using stop orders. That is experience both as a market maker and 15 years in the brokerage industry. People don't realize, and listen, there's I know some of you probably use stop. Stop is a very rudimentary form of risk mitigation. And the brokerage firms even they kind of like cringe at the use of stop orders. The New York Stock Exchange banned stop orders years ago, banned stop orders, but your brokerage firm probably still uses them, or they allow you to use them. But we have much better forms of risk mitigation tactics here than the use of your stop orders. So oh, somebody said, please give at least one real example of how to mitigate risk, okay, on selling out of the money SPY calls or puts. Here, want to see a real money example? Just cruise over here to the account statement. Okay, these are live positions. Here's the IWM. You ready? Most people are not going to understand this. In the IWM, I have a couple positions here that are short calls. All these are naked short calls. Okay. This is a 3 lot of what we call a gamma iron. This is termed an inside hedge. We are buying shorter duration options to actually hedge the outside. So buy the inside, sell the outside. And this is actually done in an appropriate ratio unto which we will actually show that in the class of how to mitigate the risk in here. And I've already pulled off a bunch of profitable trades, in here, but the hedge is there just in case I need it. The hedge is actually ironically profitable as well. So that's one example. And again, that might not make a lot of sense to you right now. It will during the class. Okay. I think that that's actually a great and fair question. Like one real example of how to mitigate risk. We're buying the inside, selling the outside. By the way, somebody said, can this, approach create a full-time income opportunity? I understand it's relative to a person's situation, ability to skill. Okay. So if you look at those that really do live from trading and survive in the business and actually trade, predominantly they're premium sellers. Okay. I mean, premium selling is a much more significant methodology than going out there like, listen, we have traders here at TheoTrade that scalp futures all throughout the course of the day. Scalping futures, okay, can produce great returns, but you are sitting in front of the computer all day long. Premium selling, okay, premium selling is much more of like passive income generation while mitigating risk. Okay. But those that, I'll tell you what, those even that trade throughout the course of an entire day still predominantly sell premium on the side. And it's been a staple for years, but premium selling, okay, it hasn't been as good over the last, let's say, 5 or 6 years. Right now, it has come back into vogue again, big time. And I've said that like 4 times because the edge in the sale of premium is, again, it's better now. And I look at this stuff, the edge in selling premium is better now than at any other point in time since all the way back to 2011, 2012. I mean, you literally got to go back almost a decade to see premium selling this good. I mean, premium selling was still working, the last couple of years, but not nearly as good as it is now because the skew is it's just massive in there. So again, I know I've gone way over time. By the way, I like when it says, somebody said when I try to sell the May Tesla 1700 call, it won't let me. It says illegal because you are not approved to do that particular trade. That's okay. We can help you get approved to do those types of trades. So that's no problem whatsoever. But to sell a Tesla call is going to imply a lot of margin tied up in that one. We can help you mitigate some of that risk. So somebody said, if I have an existing March expiration, okay, is there a way I can hedge with this system? Okay. You have an existing trade on for the March expiration. Listen, that's a lot of risk. I'm just going to tell you flat out, we're closing trades typically that have like a month to go to expiration. You're going to need to figure out how to do a gamma iron real quick, or you're going to take heat. I wish I could tell you otherwise, but that's the truth. Is you got to learn, like, the risk mitigation side of this is, that's the part of the class that produces profits, like the risk mitigation. Anybody can go out and do 90% trades. It's what to do when things go awry that separates, the profit from the loss. And that's what this class goes so heavily into. And that's again, a lot of what we do here at TheoTrade is again to produce not just, a trader, but produce a consistent trader. So I know, again, I've gone way over time. I know we still have a couple of people enrolling here. I want to thank, by the way, everybody that tuned in to this, throughout the course of the day. As I said, I went way over in time. We appreciate you guys for hanging out with us. I'm left with the idea that there's only one riskless spot left in here. So tune in. It's theotrade.com/skew. We are live in the chat room, literally Monday through Friday, bell to bell. Feel free to hop into TheoTrade. Check us out. Email us anytime. And of course, this class is coming up live February 23rd and 24th, right here inside of TheoTrade. Thanks everybody for joining us today, and have a wonderful